Labrīt.
Good morning.
Honorable Vice President of the European Commission, Dombrovskis, Excellencies, ladies and gentlemen, dear guests, warm welcome to the conference that we celebrate the 10 years with Euro. I will start with a short quote from Mario Draghi from his famous speech in 2012, which became famous with a sentence, "Whatever it takes," and that we refer to as saving Euro. But also in the same speech, he said that Euro is irreversible. And I do believe that those 10 years that we have been living with Euro, since the introduction of Euro, we have seen that it has become an unchangeable part of our lives. But of course, behind the introduction of the Euro, it was preceded by a lot of effort, by a lot of work, by a lot of people. And I would like to acknowledge the work done before the introduction of the Euro. And I'm glad to see that many of the people that worked on it are here with us in the hall today. This year, we celebrate 10 years with Euro, but we also mark the 25th anniversary of the birth of Euro, and we also will celebrate later on the 20 years since Latvia and 9 other countries became members of the European Union. Today's conference, we will aim to look at the past, at the present, but especially at the future of Euro in those turbulent times. And I do believe that with the insight of so many esteemed speakers, you will have a lot of different ideas that will further on help to shape the future of the Euro. And without further ado, I would like to invite to the stage the President of Latvia, Edgars Rinkēvičs, for the opening address. President kungs, vārds jums.
Honorable Mr. Kazaks, Honorable Mr. Dombrovskis, President Bērziņš, President Vējonis, President Levitt, ladies and gentlemen, Excellencies, this year is a year during which we have many celebrations and during which we reflect, because 20 years ago Latvia acceded to the EU and NATO, and 10 years ago we introduced Euro. I have to say that these very targeted decisions that resulted from the efforts of many politicians, officials, and diplomats, many generations of these officials, they have contributed to our security and trustworthiness with our partners and investors. Reflecting on this time, I have to say that joining the Euro area was a very complicated and tense process. Before introduction of Euro, only approximately half of the Latvian inhabitants supported this idea, and at the very beginning of this process, it was just 30%. In Eurobarometer survey, at that time, 43% supported, but currently, the overwhelming majority supports our participation in the Euro area. I remember this time very well. We had a lot of heated discussion, a lot of rational discussion. Some thought that Euro would bring economic stability, predictability, and closer integration, development, while others didn't want to give up the monetary independence that recently regained national, stable, and beautiful local currency, lats. But now, in 2024, Euro has become an integral part of our daily lives and our economy. Introduction of Euro was not a goal in itself. It was a tool for us to be able to use the advantages of the European single market. It contributed to our competitiveness and facilitated the mobility of people and companies in the European Union. It also strengthened our link with the European Union. I would like to use this opportunity to say huge thank you to those who made sure that euro is introduced in Latvia. And I would also like to say thank you to those who do everything at the moment for the euro to be a strong and a trustworthy currency. And I also wish this currency to work for the benefit of our people.
Turn to English. Throughout the years, there have been many events that questioned the viability of the euro. But the euro has constantly proven its worth. Latvia has a remarkable story to tell about the euro's adaptation. In 2014, we became the 80th member of the eurozone. By that time, Latvia had established itself as a trusted member of the European Union and NATO. Consistent decisions to pursue closer ties to the West is our safeties and securities guarantee today. We also view this as the cornerstone for Ukraine's fight against aggression. Latvia introduced the euro only 4 years after the global financial crisis. Since then, it has continued to make significant progress. For Latvia, euro proved to be a powerful tool for our economic stability and integration in the European Union. It has also provided a sense of security and confidence for businesses and society. After introduction of euro, Latvia has gone through several storms. COVID pandemic presented a great challenge for our companies and the society. The government support package helped to mitigate the economic fallout. Coming out of the pandemic, Latvia's economy was one of the least hit in the European Union. It differs from the financial crisis before the euro, when Latvia saw its economy shrink the most. Russia's war against Ukraine has further tested Latvia's resilience. We have been heavily reliant on imports of energy and raw materials from Russia. The war caused the rapid rise of the inflation. Only within a year, majority of Latvian companies were able to restructure their supply routes and find new partners. Most of them are in Europe. Without the euro, it could not have happened that fast. The resilience of our economy shows that Latvia is better off with the euro than we would have been without it. Latvia continues to enjoy a better credit rating and lower government borrowing costs compared to non-euro Eastern and Central European countries. When Latvia was joining the eurozone, Herman Van Rompuy, the former president of the European Council, said, "The eurozone is again a club with a key, not at the exit, but at the entrance." Now we are in the club. And there is a line again. Bulgaria is already at the gates. And I wish them a successful introduction of the euro. Romania and the Czech Republic are lining up. It will not be easy to join. It was not easy for us either. The euro gatekeeper is quite strict. It ensures that the dress code perfectly fits economic convergence criteria. But once you are in, you are with the best. The membership alone does not guarantee success. It takes continuous effort to maintain the relevance and standing among other popular clubs. As a member of the club, we have to make the best out of it. It depends on us. It's up to us to decide whether we will spend the entire party just sitting in the corner, or we seize the opportunity to connect with the new people, cultivate meaningful friendships, and generate innovative ideas. The list of do's and don'ts for Latvian economy is well known. We have to invest in human capital, connectivity, sustainability, and innovation. We need to streamline our administrative processes to increase efficiency. But I'm absolutely confident that we have the potential and the right conditions. Now, it is the time to make decisions and act. I thank you very much for your attention, and I wish you a very successful conference as far.
Paldies, valsts prezident.
Thank you, the President of Latvia.
He has led Latvia through challenging times of economic and financial crisis, implementing difficult reforms and fostering Latvia's growth and recovery. His determination and efforts paid off when Latvia joined Eurozone. With Latvia in his heart, he's shaping economic and trade policies of the European Union and globally. And last but not least, I have to highlight the relentless dedication in supporting Ukraine. Please welcome to the stage the Executive Vice President Valdis Dombrovskis.
Labrīt, Riga.
Good morning in Riga. I am very glad to be here in Blackhead's house after 5 years to celebrate 10-year anniversary of Euro in Latvia. And I am very glad to see many of the team of that time with whom we worked together for implementation of Euro. And one of them is indeed the president of Latvia, Edgars Rinkēvičs. We were thinking or wanted to mention people who worked at introduction of Euro, but that would take very much time. That's why I will not name you all and notify your endeavors for introduction of Euro, because we know that very well, each and every one of ourselves.
Excellencies, governors, ministers, ladies and gentlemen, a very warm welcome to this conference co-organized by the European Commission and Bank of Latvia. For me, it's a pleasure to return to my home city for this momentous occasion. Not only we celebrate 10 years of Euro in Latvia, it also coincides with 20 years of Latvia's membership of the European Union coming up this May. Many people who worked to bring about both achievements are here today. All of us wanted to see Latvia to take its place at the core of the European Union. At the beginning of 2019, it was at this very venue when I came to talk about Latvia's 5-year experience for the Euro, the magnificent house of the Blackheads in the heart of the Riga Old Town. For a quarter of the century, Euro has been making life easier for Europeans. Today, it is the second most widely used currency in the world. For such a young currency, it's an impressive feat in a relatively short space of time. I remember very well the early 2002, when Euro banknotes and coins appeared for the first time in 11 EU countries with combined population of 308 million. It was the largest cash changeover in history. Not yet in Latvia, of course. When Latvia was discussing the idea of joining the Euro, we were just emerging from the global financial and economical crisis. Back then, there were many skeptics. Some of them claimed that Latvia was buying the last ticket to the Titanic. However, our determination to join the Euro provided a solid policy anchor at the time of great economic stress for the country. Latvia has entered the crisis as one of the most overheated economies in the world, with lax fiscal policy and unrestrained bank lending. Preparing for the Euro entry also helped us to set out a major reform agenda, which was badly needed. On the economic side, since 2014, we have found the Euro to be a stabilizing force that also helped Latvia's competitiveness. It has provided a significant incentive for economic development. I don't want to overburden you with figures, but they do tell their own story. According to Eurostat, between 2013 and 2022, Latvia's GDP per capita rose by 10 percentage points to around 73% of EU average. Or take labor productivity, which has increased by 12 percentage points to 75% of EU average. Since the euro was introduced, a clear majority of Latvians believes that having the euro is a good thing for their country and good for Europe as well. Some benefits are very tangible. Latvians can compare prices easily when they travel and shop abroad. They see the euro as making it easier to do business in other countries, removing currency risks and conversion costs. More widely, Europe's common currency has improved countries' business environments and made them more attractive for investors. This is certainly the case in Latvia. Why? Because using the euro remains uncertainty about countries' future monetary policy. It strengthens external credit ratings. It reduces public and private funding costs. In turn, all this helps to promote growth, helps to promote foreign and domestic investment, leading to higher economic growth and more jobs. Euro membership also brings a range of benefits that may be less obvious. For example, it subjects a country to specific EU laws in areas such as banking and fiscal policies. Stronger fiscal policy coordination in the euro area helps to ensure sound fiscal policies and the formation of buffers to deal with future shocks. And it comes with a massive firewall, the European Stability Mechanism, that can provide financial support in case things go wrong. This promotes financial stability and fiscal discipline in countries concerned. It is good for the EU as a whole and boosts our collective competitiveness. Ladies and gentlemen, for the Baltic states, and I hope that my Estonian and Lithuanian colleagues would agree, adopting the euro was a watershed moment. It was not just about raising economic efficiency and promoting trade and investment. We also had a strong political motivation to be more closely integrated in the core of the European Union and the democratic world. For Latvia, it sealed our full membership of the European family, tying us into its values, rights and freedoms. Solidarity and partnership, human rights, justice and the rule of law, to name a few. It gave us a true feeling of acceptance and belonging in Europe. I say that because since its launch, the euro has become far more than a currency and a means of exchange. It is a symbol of Europe's strengths, unity and solidarity, the cornerstones of enduring European peace. That peace is now threatened by Russia's brutal aggression against Ukraine. In itself, it represents an attack on European values. With the hindsight of history, it is clear that we were right to think as we did after regaining independence, to work towards joining the EU and NATO as a matter of urgency. Given the Baltic region's precarious location on Russia's borders, our shared recent history and familiarity with our large neighbor, we also saw euro as a part of protective barrier and vital for keeping our currency and economy stable. I particularly remember the high level of support in Lithuania for euro adoption. It took place not so long after Russia's illegal annexation of Crimea in the first quarter of 2014, and this has helped focus people's minds. Today's tense geopolitical situation makes it more important to be properly anchored in a camp where we belong, in a free and democratic world. It is also important as a way to preserve stability and to protect ourselves against risk or speculative attacks. This is especially true for small open economies that are geopolitically more exposed, such as the Baltic states. Belonging to the euro makes us feel a good deal safer. It has helped us to survive a series of shocks and to stay strong in an increasingly volatile, hostile and fragmented world. On the economic side, without the euro, the impact of the pandemic and now Russia's full-scale war against Ukraine would have hit us much harder. Euro area membership brings greater credibility. In turn, that leads to lower borrowing costs and greater economic stability. We can illustrate this by looking at the interest rates. Throughout the pandemic, 3 months interest rates in the euro area remained relatively low to compare with those of non-euro area countries such as Hungary and Poland. But the difference between widened significantly after February 2022, when Russia launched its military offensive against Ukraine. Interest rates in non-euro countries rose more sharply than in the euro area. Over the past few years, interest rates have turned back from the previous extreme lows to address high inflation rates. And the ECB's policy is proving successful. Inflation is declining across the euro area, also in Latvia, where the shock has been particularly significant given the country's high exposure to soaring energy prices. The coordination between monetary and fiscal policy has allowed us to lower inflation without creating a large economic downturn. In this context, the euro area economy has showed remarkable resilience, not least thanks to the good policy mix. However, we cannot say this so clearly for some member states outside the euro area. Here, the economic risks are higher and long-term interest rates are substantially above those within the euro area. This has significant implications for companies regarding their investment decisions and future growth potential. Ladies and gentlemen, when the euro was born in the aftermath of the Cold War, the world was a relatively calm and stable place. Not so much now. Today's world is characterized by great power rivalry. Patterns of influence are shifting between regions as well as continents. Across the world, we see rising protectionism and unilateralism. In such turbulent and changing times, the EU can achieve much more when its member states act together and stay united to protect one another. The euro is a key element that underpins European unity and strength. We see it reflected in a strong public support for a single currency from Helsinki to Lisbon, from Athens to Dublin. The Eurobarometer survey carried out in October, nearly 8 out of 10 respondents in the euro area said they thought having the euro is a good thing for the EU. Together, the 20 countries of the euro area command significant influence by pooling their economic strengths. This not only mitigates the risks faced by individual countries, it also acts as a safety net and anchor of credibility and stability. Since the euro is used extensively in global trade and financial markets, euro memberships limit the risks of sudden capital outflows if a crisis strikes. At times like these, banks operating in the euro area can draw on support from the European Central Bank. This means they can continue to lend to people and companies when it's needed. We saw this happening during the pandemic when times were especially tough. So, what of euro's future? The number of countries using the euro has now grown to 20, with Croatia the latest to introduce it at the start of 2023. Bulgaria is likely to be next country in line. It has been taking part in the exchange rate mechanism too since July 2020. It is working hard, both technically and politically, to meet the convergence criteria required to join the euro area. Bulgaria has made significant progress, and I hope that it will soon fulfill all the criteria so that it can become the 21st member of the euro area. Having more countries keen to line up in a preparation to adopt the euro is only a good thing. It confirms the euro's status as a successful, attractive, and resilient global currency. Also, expanding the euro area strengthens its wider role and influence. It promotes and boosts euro's role on the international stage. This can help us to protect multilateralism and rules-based economic order. In a fast-changing and more fragmented world, a strong role for the euro reduces our dependence on the decisions of other countries. It allows us to better defend the EU's interests and values internationally. Ladies and gentlemen, I already mentioned the difficult geopolitical landscape. Against this backdrop, and much continuing uncertainty, it will be essential to maintain the EU's global competitiveness. That means constant investment in innovation and technological leadership, achieving the green and digital transitions, and promoting our open strategic autonomy. Primarily, this means investment from the private sector. Let me start with the banking union, a flagship project for the euro area and essential part of the genuine economic and monetary union. We have been working hard to make sure that the EU's banking sector can continue to be a reliable and sustainable source of finance for the EU economy. After many years of work and reform, EU banks are now strong and in good shape. The sector has built up its resilience substantially. The EU system works well with strong rules that allow both the EU and national authorities to handle bank crises effectively. But we are not quite there yet. Despite all the progress made, there is still a lot of work that we need to do. We are missing an important element of the banking union, the European Deposit Insurance Scheme. So we need to keep working towards completing the project as we started all those years ago. However, as part of the EU's broader investment plan, we also need to unlock alternative sources of bank finance and lending, especially given the scale of investments that we need. This brings me to the Capital Markets Union. Deepening and further integrating Europe's capital markets is the most cost-effective step we can take to drive investment. Such markets give investors and firms more options and better saving opportunities for households. They unlock new sources of financing for companies, especially SMEs, making it easier for them to expand and thrive. A fully developed CMU would also further support EU-denominated financial markets and thus the euro itself. For all these reasons and more, completing the banking union and advancing with the capital markets union remains a priority for the EU. Doing so will help us to build a conducive business climate that is attractive to investors and help us build global confidence in the euro. However, the euro also needs to keep up with the times and with the digital age. While we can be proud of what has been achieved so far, there is a need to adapt and innovate. As we move towards a true digital economy, a digital euro is a logical next step, given the declined use of cash in many parts of the world, including Europe. The digital euro would complement cash, but not replace it. And to be clear, the possible launch of a digital euro is a prerogative of the European Central Bank, which will have the final decision about if and when to introduce it. I'm sure our next speaker, Fabio Panetta, will have more to say on this important subject. To conclude, our common European currency started as a dream. It was an idea that was first mentioned in the 1940s by some forward-looking politicians who understood that a united Europe would need a strong single currency. Many years later, in the late 1980s, monetary union became a project to complement the closer economic and integration that was developing in Europe. This project, the Euro project, finally became a reality on 1st of January 1999, when 11 EU countries merged their national currencies and the euro was born. When I was a Prime Minister, I had to oversee a major adjustment program. Our country went through significant economic and social pain. But we came out stronger, and one lesson was clear: we had to join the euro. This was one of my key priorities at the time. I'm proud that Latvia, Estonia and Lithuania as well have become fully participating members of the euro family. It serves the Baltic region well, and we hope that we serve it well in return. As I have outlined, the euro has many benefits for people as well as businesses across Europe. It is a political and economical anchor in peaceful as well as in turbulent times, and it gives us a real sense of the European belonging. Today, a quarter century later, the euro is no longer a dream or a project. For most Europeans, it is a stable and essential part of our daily lives. Thank you.
Thank you very much to the Executive Vice President. And our next speaker is widely recognized across Europe as a driving force behind the digital euro, especially during his tenure as an executive board member at the European Central Bank. His vision and knowledge of monetary policies is highly valued, and we have a great opportunity to listen to him today. Let me welcome to the stage Mr. Fabio Panetta, the Governor of the Central Bank of Italy, please.
Your Excellency, President Rinkiewicz, Honorable Executive Vice President of the European Commission, Mr. Dombrovskis, dear Valdis, Ministers, Governors, distinguished guests, ladies and gentlemen, I am delighted to be here today. It is a great pleasure to talk about the euro on the 10th anniversary of Latvia's adoption of the single currency. Actually, there are many other good reasons to celebrate. The euro itself was launched 25 years ago, in January 1999, and at the end of that year, Latvia started the negotiations to join the European Union. These events are all part of a single, coherent historical process, driven by the integration project that Europe undertook in the post-war period. The Economic and Monetary Union, EMU, is one of the most ambitious elements of this project, and the euro is both a key achievement and a powerful symbol of success. Considering my role and background, you might expect me to talk about the euro purely from a monetary perspective. However, this is not what I'm going to do today. Finance is a means to serve society, and the euro is no exception. The single currency has objectives and implications that go far beyond the monetary sphere. Its fate shapes Europe's role in the global economic and financial landscape. Its function as an international reserve currency affects Europe's strategic autonomy and geopolitical position. From the perspective of 2024, the relevance of these issues can hardly be overstated. My remarks today will be organized around three broad themes. First, why do we care about the international role of the euro? Second, how this role, the international role of the euro, has evolved so far. And third, what can we do to strengthen it? So why do we care about the international role of the euro? Before February 2022, most people would have answered this question in purely economic terms. Issuing a global reserve currency brings clear benefits to an economy. These include higher seigniorage, a reduction in transaction and hedging costs, and what economists call exorbitant privilege. That is, as long as there is strong demand for safe assets, the issuer of a global reserve currency enjoys lower funding costs than its peers and earns a higher return on its net foreign asset position. The global status also creates risks that central banks should be aware of. During the global financial crisis, for instance, the exorbitant privilege actually turned into an exorbitant duty. The United States unwillingly became a global bank, experiencing a sharp exchange rate appreciation. All in all, however, the macroeconomic benefits are very likely to outweigh the risks. Research suggests that by exploiting high demand for dollar-denominated assets, the US Treasury has historically generated revenues of about 0.25 percentage point of GDP per year. This figure is likely to be much higher, twice as large for the euro area. This means several billions of euros every year. More importantly, Russia's unjustified aggression against Ukraine reminded us that these considerations are, at best, only half the story. The other half has to do more with politics than economics. In a politically volatile world, a country that issues an international currency is less exposed to financial threats from hostile nations. The reason is very simple. Its payments and financial flows do not require the use of other currencies. In and of itself, an international currency is a pillar of a jurisdiction's strategic autonomy. I believe Europeans fully appreciate this function today. The issuer of a global currency can actually go further and use its financial power to actively influence international developments. But this power must be used wisely, because weaponizing a currency may stimulate the emergence of alternatives. The case of the renminbi is instructive in this respect. The Chinese authorities are explicitly promoting the role of the renminbi on the global stage and encouraging its use in other countries, including those countries that have been sanctioned after Russia's unjustified aggression against Ukraine. As a result, at the end of 2023, the renminbi overtook the euro as the second most used currency for trade finance and the yen as the fourth most used currency for global payments. There is little evidence so far that political fragmentation is systematically translating into currency fragmentation. But we should be alert to the possibility that politics will have a greater impact on international currencies in the coming years, and vice versa. Let me now examine how the euro performed during its 25-year journey. Broadly speaking, the euro's share in global portfolios fluctuated between 17 and 25%. The dollar share is, and has always been, much larger, around 60%. Given that the size of the US and euro area economies is roughly the same, one may think that the euro is punching below its weight. The data give clear clues on why and when the euro has not gained ground in global markets. The share of the euro in global markets declined significantly during the sovereign debt crisis. At that time, investors believed that the monetary union could break up under pressure. Procyclical policies and conflicting messages from policymakers did little to reassure them. As a result, the euro inevitably lost ground. Now, let's fast forward to more recent times. Between 20 and 2022, Europe was hit by a series of large and persistent supply shocks. The pandemic and the invasion of Ukraine caused a dramatic rise in uncertainty, disrupting production lines and trade flows. However, the shocks hit an institutional system that was better equipped to deal with them. And they were countered by a mix of strong and coherent policy responses at both European and national level. As a result, in the last 3 years, the euro held its ground and by some measures even strengthened. The bottom line is that the euro area can successfully withstand large shocks, but in order to do so, it must stick together and react with quick, determined, and appropriate policy responses. Let me now turn to the question of how can we strengthen the international role of the euro. In my view, the recipe has 3 key ingredients. The first and most obvious one is macroeconomic stability. When foreign investors buy euro-denominated assets, they are effectively investing in our economy. The dividend that they expect is economic growth and low and stable inflation. And the only way to protect this dividend is to implement credible, effective, and counter-cyclical macroeconomic policies. The second ingredient is a liquid and integrated capital market. This is hardly a new topic. Vice President Dombrovskis mentioned and described it in detail. We all know that a fully fledged capital market union could play a key role in Europe. What is less known is that the capital market union would also boost the global role of the euro. Over the past 25 years, the global circulation of the euro followed the same path as financial integration within the eurozone. Measuring financial integration is not easy, but most indicators tell the same story. Integration rose steadily in the early 2000s. It then dropped to a minimum in the sovereign debt crisis and resumed in 2012 after the launch of the banking union and the ECB's outright monetary transaction. And it maintained its momentum throughout the COVID pandemic. This synchrony between integration and the international role of the euro is no coincidence. The global relevance of the euro goes hand in hand with the degree of financial integration within the European Monetary Union. The problem is that, all in all, European markets are about as integrated today as they were in 2003, 2004. How can we do better? I would like to mention two limitations of the current setup that I see as critical from a CMU and global euro perspective. One is the lack of a European safe asset. A common risk-free benchmark would facilitate the pricing of other financial products and provide collateral for centralized screening activities and cross-border trading in interbank markets. It would also form the basis of the international reserves held by foreign central banks. The issuance of the next generation EU bonds is a first important and welcome step in the right direction, but a one-off program is not a game changer. To stimulate the development of a CMU, Capital Market Union, and strengthen the international role of the euro, we would need a steady, predictable supply of European safe assets. The second limitation is that we do not have a full-fledged banking union yet. The creation of a single supervisory mechanism and a single resolution mechanism was a quantum leap in this respect, but it was not sufficient. The European banking sector remains largely segmented along national lines. This hinders the capital markets union because banks play a key role in financial markets. They have a pivotal role as asset managers, financial advisors, market makers. It is therefore difficult to imagine a genuine capital markets union without banks that are the main players in capital markets being able to operate smoothly throughout the entire euro area. Improving in these dimensions is as important as ever. In the coming years, Europe may have to navigate a more challenging global political environment than in the past, and a fully functioning capital markets union would greatly enhance its chances of success. The third ingredient that is needed to strengthen the international role of the euro is payment and market infrastructures fit for the 21st century. A central bank digital currency, CBDC, can play an important role on this front. And the good news here, not because I've been in charge of this project, the good news is that Europe is in many ways at the forefront of the progress in this area, at the global level. Also from the legislative viewpoint, the Commission has just published a legislative proposal which is an advanced legislation that other countries do not have, other major countries do not have. In addition to making life easier for European citizens, a digital euro, the retail CBDC that is being considered by the euro system, would offer great opportunities at international level if it could be made available outside the euro area or used for cross-currency payments. The same applies to a wholesale CBDC, that is CBDC used by banks for interbank payments. Unlike the retail version, this is already a reality. The target infrastructure, which is operated by the Eurosystem, the European Central Bank and the national central banks, allows banks to settle digital euro interbank transactions in central bank money via a central ledger. And this infrastructure has been operating successfully for decades. Building on this experience, the Eurosystem is now exploring new solutions based on advanced technologies, such as distributed ledger technology. Other initiatives launched to modernize the EU financial sector include developing the Eurosystem collateral management system, adopting the new EU regulation for markets in crypto assets, and revising the European market infrastructure regulation, and many others. As well as supporting the role of the euro, these initiatives could give a much-needed boost to global cross-border payments, which are currently expensive, sluggish, and not very inclusive, to put it mildly. Ladies and gentlemen, to conclude, let me step back from the technicalities and get back to the big picture. The rise and fall of global currencies is often seen as a structural process that unfolds slowly and smoothly over time. History tells us otherwise. In the last century, the dollar overtook sterling as the main invoicing currency in the immediate aftermath of the First World War and equaled its share of global bond issuance around 1929, very rapidly. However, the rise of the dollar reversed sharply with the Great Depression, and the two currencies, the dollar and the sterling, coexisted at the apex of a bipolar monetary system until the 1950s. In short, the making or unmaking of an international currency is not only complex, but also volatile, non-linear, and less predictable than most people think. This means that the international role of the euro is not set in stone. Over the next few decades, the euro could maintain its role, be relegated to the periphery of the global monetary system, or gain a stronger position at its center. And we like the last hypothesis. To strengthen its role, we need macroeconomic stability, a fully fledged banking and capital markets union, and dynamic, future-proof payment and market infrastructures. The common thread behind these initiatives is that they all reinforce the European integration process. They would allow us to build on our past achievements and take the economic and monetary union a step closer to a truly integrated monetary, fiscal, and political union. The stakes are very high because the EMU is much more than just an economic arrangement. It reflects the dedication of its members to European unification. In times of geopolitical tensions, the European Economic and Monetary Union also functions as a collective defense clause. Any attack against a member of the Union affects the single currency, which is a crucial pillar of our shared sovereignty, and is consequently an attack against the entire Union. The EMU is a vehicle that generations of Europeans have built to pursue peace, freedom, and prosperity together. It embodies their desire to work together on the world stage. As such, it deserves our unwavering support. Thank you very much for your attention.
Thank you, Governor Panetta. Now, after these rich introductory speeches, we will proceed with the panel discussions. And for that, I would like to ask on the stage Lukas Ilves, Undersecretary for Digital Transition at the Estonian Ministry of Economic Affairs and Communication. And he will be the moderator of the panel. So I hand over to you. Thank you.
Please, all of our panelists, please join me. Panetta right here. Hi.
mettere by we shake hands again.
Exactly. This morning.
Nice.
So, ladies and gentlemen, thank you, gentlemen, for those speeches. I think they set the scene well. We live in an era of convergence where political and economic considerations are increasingly connected to technological considerations. And I think this is what you talked about in your opening speeches. We see this in great power rivalry, where the Chinese-American rivalry is in many ways now being denominated by the question of who has access to artificial intelligence chips. We see this on the battlefield in Ukraine, where algorithms and data have made a real difference on how people are able to use artillery to achieve their battlefield outcomes. And thus it will also be for the future of money. Alongside economics and politics, technology will determine the outlines of tomorrow's monetary and financial system. So today, as we heard, the euro is the second most important currency in the world. But the question we face is, will it remain so? The world of money and payments is changing rapidly. Digital wallets, mobile application, instant payments are replacing debit and credit cards and traditional bank transfers. Crypto assets are trying to revolutionize how payments work as a whole. And in the euro area, outside service providers account for a large share of these new possibilities, while European private sector alternatives are mostly national in scope. Finally, we know that many economies are looking to dethrone the role of the dollar, but are they really interested in replacing that with a dominant euro, or do they want something else? So we heard that many central banks across the world, including the euro system, are developing digital currencies, which would provide alternative means of payments that are secure, efficient, easily accessible. This will be a major new public infrastructure. But how will this infrastructure interact with private sector solutions? What do we need to do to ensure that Europe's payments and financial services don't go the way of European tech companies, displaced by their American and Chinese competitors? And what will the tangible benefits to users be? To discuss all of this, I could not imagine a better panel than the one we have assembled here. We've already had glowing introductions for the executive vice president and for the governor, so I'm not going to repeat those other than that it's a privilege to have both the father of the euro in Latvia and the father of the digital euro together. But we're also joined by Cecilia Bonafeld-Dahl, who is the Director General of Digital Europe, the leading technology industry association, which represents more than 45,000 digital companies in Europe. I've worked alongside Cecilia for many years in Brussels, and I continue to see her at gatherings like this, and I can tell you she is the best advocate that Europe's tech sector has. But she's also played a tireless role advocating in the last 2 years for Ukraine, putting a lot of personal effort into bringing the entire European tech sector behind Ukraine and supporting the government and the people of Ukraine, both there in Ukraine as well as refugees across Europe. And before she took leadership of Digital Europe, she had more than 25 years of experience in the tech industry. She's held international positions at IBM, at Oracle, and at various small European companies building businesses in China and in Europe. She was a board member of the Danish Chamber of Commerce and president of the Danish ICT Association. So she knows tech, she knows politics, she knows business. And finally, we have Valdis Bergs. He's chairman of the board at Mobili. Mobili is a major payment services company here in Latvia. They're the largest provider of mobile parking payments with significant business lines in transport and event ticket sales. And Mobili is eyeing further expansion across the region into new spaces of mobile payments. Valdis is a lawyer by training, so he sees, again, multiple disciplines here. But what I think is most important is that alongside, officials and politicians, we have someone who's really on the ground right now and who, when we get to the digital euro, is going to have to be implementing it and whose daily bread will depend on how we build tomorrow's payments landscape. So what we're going to do is I'm going to ask Cecilia and Valdis just to start off with some brief opening statements of their own, and then we're going to launch into a discussion, and we will have some time for questions at the end. So with that, Cecilia, I hand over to you.
Thank you so much, and thank you for the comprehensive introduction. I must, first of all, of course, say a big thank you to EVP Dombrovskis and for your invitation and for the great collaboration that we have had on several of these agenda, not only on the euro, but on the international landscape and the TTC and many other international collaborations that we have in the EU. And of course, congratulations on the 10 years with the euro. As a Dane, I only hope that we somehow will follow one day. For different reasons, we're not there, but I can only say that if I would make a recommendation as a politician, I would recommend us to join immediately. Well, maybe to start with that, being a part of Europe and being a part of the euro is for the enlightened people who knows how important it is, and I think we can say that we all do in this room, is inevitable and of course logical, and it is something that we can all agree on. But for some countries, it's still also an emotional attachment to a currency. And I think the same case will be for the digital euro. What is this digital? Do we really need it? What is this, And we can sit here as digital Europe or as Europe and look at it, but that is the reality that we basically need to address if we, for example, want something, the next step, the digital euro, to become a reality. We need to translate it into real benefits for citizens so they understand the combination of currency, their coin with the Queen, the King, the President, and the emotional need for security in a united Europe. If we can actually manage to get that connection between a digital euro and the need for security and unity in Europe in times of geopolitical tensions, that would be the first step for me. Technically, yes, we can do it. We heard Governor Panetti saying, this is actually, the infrastructure is already there. We have the innovation. Private sector, exactly. I mean, we do have very strong innovators, and we need to make this a public-private partnership. And remember that in times where we need stability, the private and public sector collaboration is absolutely crucial. We cannot make this only a banking or a public sector program. We need to build the strong innovators around a digital euro. We have seen this development. If we look at, for example, the newspapers and the media, it used to be a government program. You had the newspapers, somehow you were more or less in control of the communication. Well, private sector innovation has basically been running ahead, and instead of just being the regulators, I think we have seen the countries that really succeed in banking, in digital banking, like Denmark, like Estonia. This has been a close collaboration with the strong, innovative powers of the private sector, and of course the regulators and the policymakers hand in hand. Only the ones who hold the digital future also holds the future of security. Cybersecurity attacks have been increasing 250% over the last few years. It is defined as the single most largest risk for financial stability. So who holds the competences basically of making sure that we are not attacked? We saw in Ukraine what happened. They called upon private sector. Microsoft, many of the big companies that has the top notches in cybersecurity stepped in and helped to get the data out of Ukraine, helped to basically maintain stability in the financial systems, in the public sector systems. So only through a really strong collaboration on private and public sector and walking hand in hand on a digital euro, we can basically make sure that we retain that stability and that we are always on the forefront and ahead of our enemies. So, is this digital Europe going to be the next big step? I think so. 3 things to say about it. Citizens need to feel it at their heart, so it is not a threat, but an opportunity. Private sector needs to be heavily involved to maintain both the security and the innovative powers around the digital euro. And yes, why not? But let's make sure that we make it clear why we are moving there, how we are moving there, and that we make it a project where private and public sector walk hand in hand on innovation. Thank you so much.
Thank you. Shall we clap? I want to ask one question that's not about the digital euro or the euro in general before we get there. If we look at this technological transition and compare it to other changes we've seen in the last decade or two, Europe hasn't done terribly well. European companies have been displaced by American and Chinese competitors. Just in a minute or two, if we make a structural comparison, what are the lessons we can learn from other sectors as regulators, as market orchestrators to not repeat some of those mistakes?
Well, when you move into the digital age, I mean, speed and scale is basically, I mean, the two components that you need. And although we kind of politically adjusted our regulatory system, the capital market union was not a reality and is still not a reality, meaning that we have huge fragmentations. So the speed and the scale just does not exist like it has done. Let's compare ourselves to US. Another thing that US have had is that they have had huge military spendings at scale, not in Latvia, Denmark, Germany, but in US. And many of the spin-offs at the internet or what we see today has actually come out of public sector innovations in military spendings, which of course, I mean, we have woken up to the fact that we have not spent enough on security innovation across the board and the private-public sector collaboration on some of these areas. So I would say we really need to look at how we implement and stop only regulating our way to success, but how we innovate and create the scalability of companies across border. We have only 8% of our SMEs trading across one European border. If we call that a success of the internal market, I think we need to think again. Because the scalability of the digital age started 20 years ago, I would say even 25 years ago. AI is not a new thing that we need to necessarily only look on regulation. It is actually a scalable technology that needs to grow fast across border in Europe. So for me, the next commission, the next step for scalability and also for the digital euro to actually succeed is basically breaking down national barriers and to stop thinking about how we can still be nations, but how we can govern as a continent. And that is not only for, I would say, for the sake of the economy, but also for the sake of our future of security. How we do that takes a bit less, ego on the nation state and a bit more tapping into the EU. And of course, I mean, Latvia is walking on the forefront of that, but we do have other nations that needs heavily keeping up on understanding how the real, private economy works on the digital age.
Thank you. Valdis Bergs, I'm going to hand over to you. Tell us a little bit about mobility, and you're looking at what might be the future payments infrastructure. You're in the payment space. What does that mean for you?
Thank you. And I really liked your introduction stating that really we will be on the practical side of introducing, any new digital payments needs. And a few thoughts on what are our business expectations on digital euro. First is quite clear business case. Cash euro is free. Online payments bear a cost. And our processing cost at the moment is the next highest way to spend our earnings after salaries. So it's a high point of cost. Then the next step where we should have a clear understanding is the clearing process. So we would look at swift and clear clearing process, because merchants are expecting that. And here I have to mention that the Bank of Latvia already is giving access to EMIs to their clearing system, and I think that it's already a considerably great next step for providing better solutions for all our customers. But of course, if we are talking about the digital euro, from legal perspective, so it will be a legal tender. If it's a legal tender, it has to be accepted everywhere throughout the Eurozone. And the infrastructure has to be in place. Either it's offline, online, in places where online is not possible. So there is a lot of infrastructure work that has to be implemented. Even here in Latvia, where I think we are one of the most online covered nations in Europe, there still are spots where this is too costly or just not possible. So there have to be these solutions to provide complete trust, both from the users and from merchants. And from our, as an EMI perspective, of course, innovation will be the greatest driver of digital euro. So the possibility to program payments, to provide different payment documentation via the transaction, like receipts, other proof necessary for the client. And if this innovation jointly with trust and availability for everyone across all the countries in Europe with different infrastructures at the moment will be provided, then this project will be a success.
But let me maybe ask more concretely. You're looking to expand to other countries in Europe, maybe come and kick out some of your Estonian competitors up north. Cecilia just talked about the challenges with cross-border SMEs. What do you need from a digital euro so that as you look at your regional expansion and then next step you go and take the European market, that you can actually do that you're not hampered by the national borders? What do you need the executive vice president and the governor as part of the euro system to give you as an infrastructure so that you can be successful?
What would be the most important need? It's access to simple clearing and widely accepted means of payment. Now I have to compare it with the PSD2 solutions, which we already have. And the problem with PSD2 is that there is no common technical standard and no common rules also from the business perspective. So if we compare PSD2 solutions to card payments, of course, from the ease of access and availability to merchants, the card payments win. I would see the digital euro access something better and easier to access cross-border than the card processing. So then we would have these gains.
So I want to ask then the Vice President and then the Governor, you've heard some of the needs from business, some very specific technical needs, some broader conceptual needs. Do you think the digital euro will deliver?
Yeah, well, good morning. Once again, maybe let me first come back to this question raised by Mr. Bergs on legal tender status. Just to explain a bit the interpretation of the legal tender as we are currently seeing it. As you know, we have proposed a legal tender status for digital euro, but also for euro cash. And we provided interpretation. What does it mean? It means that legal tender has to be widely accepted in each member state and widely available in each member state. We do not make an obligation that it has to be 100% accepted. So to use classical examples, you know, if you have this tiny little stand where you sell the lemonade, and if you only take cash, it can be accepted. If you only take cards, it also can be accepted. Basically, we leave to member states, also based a bit on national traditions, because some countries are more cash-based, some countries are less cash-based, where this level of wide acceptance exactly is. Okay, we kind of expect that where some necessities are being sold, like supermarkets where people are buying food, legal tender has to be accepted. Pharmacies where people are buying medicines they need, legal tender has to be accepted. But like not everywhere 100%, just from efficiency and cost grounds, especially for tiny little businesses to reduce operational costs if it needs. But that's a bit of the remark. And indeed, when we were discussing this question of introduction of digital euro, we were looking at the number of parameters. And actually, we had been working very closely with Mr. Panetta on this in our respective capacities at the ECB Executive Board and in European Commission, because it required actually close cooperation of two institutions. Obviously, one aspect we were looking is payment infrastructures and how a digital euro would interact with private payment infrastructures, to which extent it's possible to have complementary solutions, and that's what we were actually aiming for, also not to undermine private solutions which are there. And we had also a number of dedicated roundtables with the financial sector to discuss those topics and find this right balance. Of course, this work is not over. We now moved from what is called investigative stage of the digital euro to preparatory stage. So certainly this work still continues, and we will be fine-tuning those solutions which we are having, and also the legislative process on the digital euro, on the legislative proposal of digital euro is still in process, so also co-legislators may bring some adjustments in this. So from that point of view, it's important that the voice of business is heard right now, that you're also active in discussion with European co-legislators, Council, European Parliament, that this a question of, amongst other things, of interaction between digital euro and private payment infrastructures is also kept in mind by co-legislators.
Governor Panetta, do you think that the concerns we've had here and the needs are going to be addressed?
Let me do some preliminary remarks to clarify why the Eurosystem started to work on this digital euro project. And the reason is very simple, because we observe that cash is used less and less, especially after the pandemic. Consumers, European consumers, pay much less with cash and increasingly prefer to pay with digital payments. Second reason is that e-commerce is becoming more popular. It's not very convenient to pay cash when you buy online. So if these two trends would continue, it would mean that over time, public money, this cash, banknotes, would become a marginal means of payment. And this has two major problems. The first one is that we would be a state without money. No precedent in history. Never happened. Because as I tried to argue in my introduction, Money, public money, is the symbol of the strength, the credibility, the authority of the state. And we cannot think of a state without its money, certainly not for a jurisdiction like the euro area, which is the second largest economic area at the global level. The second problem is that public money, central bank money, performs a very peculiar role in monetary and payment systems. It is what we call, economists call, a monetary anchor. What does this mean? It is the benchmark against which we all assess the value of privately issued money, bank deposits. Now we have strong banks, we have banking supervision, capital requirements, deposit insurance, but crisis, banking crisis, although they are, thank God, rare events, they have not disappeared. And one simple way, when you have uncertainty, to assess the value of your deposit, bank deposit, is to check its value against the safe asset, which is cash. Now, the very simple way in which we do this every day is just to go to an ATM, cash dispenser. If you can withdraw cash out of your bank deposit, this means that your bank deposit is worth the nominal value. So we do need, for stability reasons, to have public money. So these are the reasons why we started this project and why we are building this for the euro area. Now, on whether or not we will, let me correct one thing which you said. You said I'm the father of the digital euro. The digital euro is a strange animal which has many fathers, without offense to anybody, because here we have the governor of the Central Bank of Latvia, we have Burkhard Batz, who's Professor Batz, who's board member at the Bundesbank. It is a joint project by the ECB and the national central banks. But not only that, I'm not even the father because I moved to the Bank of Italy, so I'm the grandfather because my successor is taking care of the digital euro. So strange animal with many fathers, now one grandfather, which is a peculiar.
But the practical question, and I see that Cecilia maybe wants to ask the same question, but I have to follow up. You said you're introducing something as big as the euro. It's coming into a competitive landscape. What are the things you have to get right so that it's actually, as Cecilia said, welcomed into their heart by consumers? Because this isn't just a background payments infrastructure you're talking about.
Many. It's a complex project. It would be about issuing a means of payment that can be used simultaneously in 20 different countries with different structures of their banking system, with different existing digital means of payment, with different legislations, where certainly it has to be easy to use, because we don't want to introduce anything that requires more than 2 clicks to be used. Let's say 3, but not more than that. It has to be safe, because when you offer a means of payment that people use to spend their money, to save their part of their money, it has to be safe. Third, we have conducted surveys at a European level. And the topic I just mentioned, privacy, ranks very high, I would say, is the most important element which is mentioned by consumers as the necessary requirement for a digital means of payment. Europeans want to be 100%, maybe even more than 100% sure that their confidential information will be in safe hands. And as I mentioned before, the proposal issued by European Commission guarantees this, because first, the operator, the future operator of the digital euro, that is the ECB, the euro system, would have no access to personal information. So not even the temptation, because nobody could look into the details of the payments of the users of a digital euro. We would know that there has been a transaction with some cryptographic code, but nobody would know who is the payer, who is the payee, and what is the reason why the payment was completed. So there are many others, but I think these are the most important ones. Simple, safe, protection of privacy.
Vice President Dombrovskis, I want to give you the floor, but also ask a question. Let's say this all is in place. Let's say we had the digital euro today. How would it help us with the economic circumstances that Europe faces? How would it help with growth in Latvia, Estonia, and Germany?
Maybe before I come to this question, I just wanted to follow up on your previous question. Well, maybe we are optimists, but our worry is not that the digital euro would not be popular. Our worry is that digital euro would be too popular. And that's why part of the proposal is to limit the role of digital euro as a store of value. Because we do not want to create some kind of financial disintermediation and undermine the role of banking sector correspondingly as providing credit to the economy. Because if all the bank deposits were moved to the digital euro in central bank, suddenly banks would not have a deposit base which is base for them to provide credit to the economy. So actually one safeguard which we are introducing is limitations on this store of money property of digital euro. And another safeguard which we are introducing, we are at this initial stage treading carefully with international role of digital euro. In a sense, not to arrive at some effects where that would undermine the monetary sovereignty of other countries. Okay, we don't know quite all the effects because basically we are here in uncharted territory. We know that, well, euro cash is widely used outside Eurozone and we do not see issues with this, and also the countries see issues with this. But for digital euro, we just don't know all the effects, so we're at this initial stage careful also about how the digital euro would operate outside Eurozone. So, but coming to your question, how it would help economy in Latvia and other countries across the EU, well, if we have safe, efficient digital payments, that strengthens the role of the euro in the economy, and we already were discussing it also at our speeches in a conference on how euro is actually helping with economic growth in Eurozone countries and how it has helped in particular in case of Latvia. So from that point of view, the point is that euro needs to walk in step with the times, with the declining use of cash which we are seeing. We need this digital central bank currency, so the central bank currency also needs to move to the digital age. So that's a question more still, I would say, of the overall role of the euro, but clearly we need smoothly functioning payment solutions for the euro to fully, for a digital euro to fully play this role.
Cecilia?
Yeah, no, I mean, I'm just returning also to one statement. Initially, I think it was said that the currency is the pillar of the strategic autonomy, and it makes us less dependent. And just returning to that, you asked me, what are some of the learnings that this disruptive age of digital has given us? When one of them is that we have everything in regulation. As you said, we have the GDPR, we have, you know, interoperability of data, we have money laundering rules, we have everything in place. We also invest heavily in excellence, whether that is in microchips or whether it's in fintech. You know, a lot of public spending goes to excellence. But one of the things that we didn't succeed is actually of developing some of these big new companies in tech. And of course, I mean, the euro and the financial system being one of the major pillars of stability in a society, we need to be on that wagon on growing some of these big fintech. So I'm just saying, we need to start measuring what success looks like. what are the KPIs that in 5 or 10 years we'd like to look at and say, we achieved this? Is it that we have maybe 50% of the world's largest fintech companies are European? Did they actually come out of this development and increased our stability in this private and public sector collaboration? In one of those pillars that are of essential open strategic autonomy? Is it that 80% or 70% or whatever of our SMEs and citizens trust and use our digital euro at home and abroad? So some of these targets will guide how we approach this, not only through the technical regulation and monetary sense, but how we really build an ecosystem that makes Europe stronger across the board of private and public sector. Excellence to me means that we actually built an ecosystem of innovation, not only the rule set that we would like to actually comply. And saying that, it's not about only the what, it's also about the how. One idea could be to start small. You know, don't be too specific in the regulations, but actually have sandboxing pilots where private sector can actually play a major role in defining the standards, in defining how to find the solutions, and of course to look at how the investment environment of these private sector companies can actually stay in Europe and be a part of this development of the digital euro implementation within Europe and beyond, I would say.
Valdis Bergs, I want to ask you, I mean, effectively we're talking about a product launch here, a product that you would use, a product that your consumers would use. If you look at the upcoming product launch, as it were, of the digital euro, do you have any advice for the product owners, for the product developers, around what they should do with their product?
Oh, yes. So I think that the first lesson that we learned when launching new products is that they have to be reliable and simple. So these are the two most crucial components of any product. So if it's not reliable, our client service center will be with a lot of calls and complaints, and we don't want to do that. And of course, if it's not simple, the consumers will not use it. And for any product that is intended for very broad use, it's quite essential. I think that the current digital banking solutions or any digital payments, they are used because they are easy. And onboarding has to be easy, so the same solution has to be easy. And of course, there is always a trade-off because between ease of access and security. So there is somewhere this sweet spot, because we don't want to do a lot of steps on KYC or third-factor authorizations for small payments. But of course, there is also this security aspect. So I think that it's crucial to find the perfect balance. So it's easy for use and secure enough to ensure trust and that it operates in all circumstances.
As a follow-up, do you see that a digital euro replaces the ecosystem that you're using right now for making payments, or it's one more solution that you sort of have to integrate but run in parallel with the existing connections you have to banks and credit cards?
I'm sure that it will be one more means of payment. And we will see gradually how that will develop. Will the card payment part decrease and the digital euro increase or not? And I think it's greatly dependent on the design of the digital euro system and the possibilities, what we can put on top, where and how we can innovate, because the public will use something that's more innovative, easier, provides more opportunities, and if that opportunity for the business is in place, then it can be successful, because, well, the central ECB, the central bank, the public sector will not innovate, but it has to provide the opportunities to do that to the private sector.
So I think what I'm hearing from both of you is that on top of the policy rationales and the economic rationales, we're now entering into the territory of if you're providing a tech product, you also have to think about how it is that you build and you launch a technology product. Governor Panetta, you of course mentioned that Europe will be the first major economy to do something like this. But there have been other experiments with central bank digital currencies in smaller countries in Europe and elsewhere, pilots. And while not central bank digital currencies, we've had large economies like Brazil, India, and of course China that have completely revolutionized their payments landscapes in the last 10 years. What lessons can we learn from them, positive, negative?
Well, the first lesson is that it is very complex to introduce a central bank digital currency. You mentioned China, which has not introduced, it is experimenting digital renminbi. China started to work on its digital renminbi project back in 2014, now for 10 years. The state is not a startup that could introduce one product, then it doesn't work, then you introduce another. States must safeguard their reputation, credibility. They cannot go and offer to citizens products that are not 100% safe. So it's a long process. Second, there's a lot of uncertainty yet on the technology. There are discussions on whether the most appropriate technology is based on centralized ledgers or whether decentralized DLT ledgers. DLT has many advantages, but there's no example of scalability for the dimension of such a huge project. And also for Europe, the problem is that if you want to use DLT technology, there is no European producer of DLT technology. You have many users, but then if you want to deal with a company that produces DLT technology, you have to deal with UK, US, Indian, and other countries, technologies in other countries that would not be in line with the sovereign autonomy objective of the digital euro. So it's a complex project. It takes time. Technology is also complicated. The other big lesson is that, an essential feature of any digital currency is that it would, be fully interoperable with private digital means of payments. And this is also fairly complicated. An additional challenge is what Vice President Dombrovskis mentioned, because the problem with central bank digital currencies is that they could crowd out banks. So you want to find the right combination of ease of use, convenience, but you don't want to be too successful because you don't want to disrupt the financing of the real economy, and banks are now performing that role. So there are a number of ingredients. The challenge that is looming that will be addressed in the coming years is cross-border interoperability. Because now, as you can easily imagine, all major central banks are focused on domestic objectives. When we were working on our investigation phase, we were focused on the indications which came from the European Commission, the Member States, Parliament, and it was way too early to start discussing with other jurisdictions, because the first thing we have to do to respect European legislation. And others are in the same situation. India, they have also passed their, or issued their legislative proposal, and the experimentation that they are doing aims at being, of course, 100% in line with the legislative proposal they have, which is not 100% in line with our proposal. At a certain point, we will have to square the circle and make all this compatible. We are already working, but the joint efforts are on two levels. One, in a very broad, very high level, at the international level, the G7, the G20, the Financial Stability Board are discussing and have approved general principles for the governance of CBDCs, but that's too early. And at the technical level, the central banks are already discussing, based on their ongoing projects, how to make them interoperable in the future. Thank you. Vice President Dombrovskis, this is unusual that you have someone who's launching a product and then they say, well, we don't want it to be too successful. Mm-hmm. How do you think about that? What does too successful mean for the European economy? What would the impacts of that be?
Well, first of all, what we want to achieve is a digital euro which is widely used, well, within certain limits, as we discussed, which is, coming back to what Mr. Berg said, which is easy to be used with a good functionality. I probably in this context wanted to come back to through two aspects which were discussed, which is on a privacy and functionality. In terms of privacy, indeed, we are committed to high standards of privacy. Already now, when you do digital payments, banks, payment service providers know certain information about you. I would say with a digital euro, private sector operators would know less about you and your transactions than with current digital means of payments. But it's not 100% privacy or 100% unanimity, because we also have our anti-money laundering, counter-terrorist financing framework, which needs to be observed, whether it's private digital means of payments or digital euro. But at the same time, in terms of functionality, we are actually seeing at the end of the day two functionalities of the digital euro. One is online functionality and another is offline functionality. And for this offline functionality, we could provide, in a sense, even more privacy, because that would be a small, low-risk transactions in a physical proximity, via, if it's some kind of, say, digital euro apps, via mobile phones, Bluetooth, or other means of connection, which is basically small transactions, similar as now people are just paying each other cash for whatever reasons. For those low-risk transactions, we would try to, in a sense, replicate almost the cash level of privacy or unanimity.
Thank you. We have not too many minutes left, so I also want to give a chance for questions from the floor. If you have a question, please raise your hand, and then the ladies and the gentlemen with the microphones will come and find you. No questions? Such a complex question on the future of money and payments that everyone's stunned. I think we have one in the corner. I can keep on going with questions then.
You can conclude that we have been very clear, eh?
Well, so let's talk a bit more about the security element, right? Today, financial services are amongst the most cyber-attacked infrastructures in the world. And Cecilia talked about the effort that private sector companies put into building the robustness of their infrastructures. And we've seen examples of central banks, thankfully not in Europe, who are compromised, and literally billions of dollars or euros flow from the national treasury. So if we're doing this infrastructural revolution, what do we need to do to make sure that we don't also paint a giant target, and I don't mean the intra-European payment system, on our back that welcomes in sort of the next round of attacks and in effect opens up new forms of vulnerability either for the system as a whole or for individual consumers. I don't know if Governor Panetta, if you want to start with that.
Absolutely. As I mentioned before, safety is an essential feature of the digital euro, and protection against cyber attack is also an essential feature. I will not go into the details for one very simple reason. I could not go into it. I'm not an expert of this, but let me give you one information. The euro system, which will operate the digital euro, is already providing safety to its digital payment infrastructures that are used all over Europe. So the Target 2 system, which I mentioned before, the Target 2 securities, the infrastructure which we call TIPS, which are used, the first one, target for interbank payments. Interbank payments among all European central commercial banks are realized by using infrastructures which are operated by the euro system. Securities transactions are realized through our Target 2 securities infrastructure. And citizens can already do bank transfers in real time with the system which is called TIPS, which is also operated by the euro system. All these three critical infrastructures for the European financial system are operated, and the cybersecurity is taken care of by the euro system. So we have experts at the national central banks who are actively working now, as I said before in my introduction, for decades to protect the security of our infrastructures. I cannot go into the details because my colleagues tell me many complicated things which I cannot, I'm not at ease in discussing the technical issues, but the issue is crucial, and we are investing a lot in technology. We have cryptographers, physicists, mathematicians, data scientists, computer scientists, which are taking care of our IT systems and of the infrastructures that already regulate and serve the European citizens for decades.
Well, if you think about security on the side of Valdis Pérez, I apologize, we have two Valdises on the panel. Security from the perspective of an end user company, how does your security have to layer together with what's provided to you by the payments infrastructure?
Security is a major issue, and it's not a secret that since invasion in Ukraine, a hacking wave is just flowing over European companies, financial companies. Well, I think every day somebody is trying to hack us, and they are not successful, and it will be so in the future. And thought about security and investment in security, it's like a standard of living today. But what is becoming more and more important, it's not the hacking of systems, because we know how to protect ourselves from that. But the weak link in any security system is a person. And we see more and more these fraudulent messages, AI capabilities of impersonating another person in deep faking faces, voice, etc. So what we have to be ready for is that these technologies will evolve, and fraud, as any criminal enterprise, will have means when the technology advances, and we have to protect ourselves. So I think psychology, use of knowledge of human behavior will be essential. How to protect ourselves, how we will ensure that the person will not fall for that fraud person without any specific knowledge in those means of fraud and impersonation.
Cecilia, you want to add?
No, it's just, I think your point just highlights the complexity when things, how different it is when it moves to digital, right? There's so many opportunities. I mean, the ecosystem that you need to build around this implementation of a digital euro is totally different than a cash, right? Because you have AI players that are malicious, you need to lead on AI, be super on top of how you avoid these things. So you need to develop those capabilities around it, and which we can. We have some of the leading companies in AI, but unfortunately, I mean, Europe has not yet grown that strong ecosystem, so it has to go hand in hand. And I mean, just in fraud detection, also, for example, AI plays a huge role, right? Right now, we're busy regulating it instead of finding out where we really need to lead on these things to protect citizens and to protect our transactions. So my big take would be, we need the digital euro. We need to make it a success. Private sector needs to get at the table to basically define a how. Not only a what, because all the arguments of, how can you say, logical financial stability, a pillar of our future society makes sense. But unless you have that security on cybersecurity, on artificial intelligence, on the platforms that is behind that and the innovative environment around it, it will be hard to see it fly. But I think it's just started. And that is the route we need to take to make sure that we build that, and that from the start we are all at the table to discuss those things. Yeah, maybe, I mean, we've seen EVP Dombrovskis taking Latvia also to the euro. We'll still see about the Danes if they ever join, but I do think that there is a next step, and right now there's a time in history where people like yourself has really have managed to show the value to the people and to the European member states of being a part of a larger family, also in not only the euro but a digital euro maybe in the future.
I'm going to give a second chance for one question. Good, we have a couple of hands now. The gentleman there in the middle. The microphone's coming.
Agri Sauc, Latvian Professional Insurance Brokers Association. My question is, currently, cybersecurity depends on cryptography. What are your expectations when the quantum computing becomes a reality?
And let's take the other question too, and then we'll answer those together and we'll wrap up.
Hello, thank you for discussion. First of all, Pavel Skuzmins, finance expert and consultant. I have a question about digital euro. Basically, digital euro potentially will shape and totally change the game. And do you feel ready, or do you expect potential resistance from the private banks and multinational companies like Visa, MasterCard, because potentially it will hurt their business in Europe sufficiently? Thank you.
Any volunteers? Vice President Dombrovskis?
Yeah, well, thank you for this question. Probably I'll start with a second question. Well, indeed, when you discuss with the financial sector, including banks, well, there are certain concerns from their side. We already touched upon these aspects of risks of disintermediation, that the money would flow from bank deposits to digital euro. So this is one worry which banks want to see properly addressed. Also, how this digital euro payment systems will interact with private digital payment systems is another topic, because normally we actually foresee for commercial banks the role, or other financial services providers' role in distributing the digital euro. We are not expecting that central banks will now operate with millions of citizens in every country. This role still also will be for the banks. So there are certain concerns, there are many questions. In any case, what it shows that this engagement with the private sector is key, that we need to discuss with them, they need to understand what is being prepared, we need to listen what are the concerns and maybe adjust certain things to make sure that this interaction is processing smoothly. On the first question which was asked on cybersecurity, well, it's for me it's difficult to answer. I'm not, IT expert or cybersecurity expert to say how the situation will change with the quantum computing. I know that there had been some discussions that the quantum computing is actually able to break many state-of-the-art protection systems in short time to compare if it's done with conventional computers. So certainly it will bring new challenges, but I leave for IT experts to find a ways to address those challenges because, well, security is an eternal issue. There's always, especially when we talk of money, somebody who tries to fraud this money out of people's or companies' pockets, and others which are trying to prevent it. And it has moved from physical bank robberies to cybersecurity, and certainly it will continue with the quantum computing, and IT experts will have to deal with this.
Governor Panetta?
Yeah, on the first question on the relationship with private banks. The broad majority of banks support the project. The Eurosystem has a frequent and continuous interaction with banks, with bank experts. They participate in expert groups in advising the Eurosystem on how to design the digital euro to be fully interoperable with market standards, which is an objective. In general, banks do want to understand because they want to make sure that they will not get problems other than advantages from the digital euro. So the general relationship is one of full cooperation and mutual even technical assistance. There are exceptions. There are some very vocal banks that I think are not understanding the strategic importance of the project, that do not understand that this is done to facilitate life for the banks themselves. Because think of the structure of the digital payments market now in the euro area. Digital payments are intermediated for more than 2/3 by non-European companies. On card payments by Visa and MasterCard, on digital non-card payments by PayPal. And they, in these two segments, represent 2/3 of the market. I think that if I were a banker, rather than being worried that a very strange supplier who does not want to become too successful, as Vice President Dombrovskis mentioned, could take my market shares, I would be more worried or more keen in getting back those 2/3 that I have already lost. And given that the Eurosystem and authorities in general are explaining at length in detail that they are doing this project to facilitate cross-border payments intermediated by banks, I think this second strategy, cooperation, is much wiser, and thank God the exceptions are exceptions. On quantum computing, I'm not an expert, but this, my experts tell me that with quantum computing, there are serious doubts on the possibility to protect data, but this is not a digital euro problem. This is a general problem of potential cyber attacks once quantum technology would be available. I cannot tell you more than this, but I rely on our experts who do understand these things and are working with other experts at large to try to address potential issues.
Brief comment by Cecilia, and then we're going to wrap up.
Yeah, no, I mean, so AI and quantum computing are two of the technologies that the Commission are currently defining as critical technologies, meaning that it means heavy investment, it means that we need to be leading on them to basically have a secure world. It means that we need either partners or less dependencies on non-partners in these areas, but there is no doubt that AI and quantum are the biggest at the moment. Maybe in 10 years it's totally different, but the two technologies that has the biggest impact on cybersecurity. Luckily, the democratic world still has an advantage there, but you know how innovation is. You need to stay at the forefront at all times, but luckily it's something that, that Europe has woken up to, and where we collaborate very closely with our like-minded partners. And of course, as you say, Panetta says that it's not a digital euro problem, it's a societal problem. And we can wave goodbye to GDPR and all the rules that we have if we don't stay in the forefront of these technologies. That's also a reality. So just on the players, of course, I mean, we have the banks, we have the Visas, the MasterCards, we have the tech innovators, we have all the scale-ups that are in fintech. So we have the whole community within Digital Europe. And of course there is, I mean, what I find valuable is actually that they discuss together how they can make this work. And I think that's the most important discussion in this, is this needs to work. And some of the concerns are not only of political importance, of, you know, what do we want and big ideas, it's how do we do this in a safe way that makes us more resilient and more stable? Which means that these players that are all at the table, they play a crucial role in the cybersecurity concerns, in the knowledge of how to do financial safe transactions. And of course, it needs to be a discussion with those market players as a whole. Some of the ideas on the table is like, should we start with one account per citizen with a limited amount of money to basically make sure that we don't get into, you know, everybody taking their cash out or their digital cash out at the same time, or financial instability, or, you know, that there is too much complexities in the system from the start. Multiple things are being discussed in the industry associations right now, and we will basically come out with an idea on how to approach this in a way that works for the private sector and works for the citizens, and of course for the stability of Europe this summer. So hopefully in dialogue with our stakeholders, we are able to define the how and not only the what.
I'm going to now try and summarize in about 45 seconds what has been an extremely wide-ranging conversation. And I think perhaps what you heard at the beginning from the governor and the vice president, you heard about the strategic challenges that the euro faces, both domestically, what we've learned from the last decade, and globally. And we're now in a time period where part of solving that problem and facing those challenges is going to involve launching new technologies and new products. And so you've seen here an example of how different paradigms are going to have to come together, how the strategic considerations and what economists think about lead into discussions that look very different when we get into what it means to actually launch a product to deal with the security concerns, to facilitate its uptake, not just around banks, but a much wider variety of private sector providers. So I hope one of the takeaways that everyone has here is that we still have a lot of experimenting, a lot of discussion to do, but that we're moving forward collectively with a fair amount of tempo and gusto, and that the people on the stage here are going to be playing a very major role in what money looks like 5 and 10 years from now in the future globally. So please give the entire panel a very warm applause, and then we'll go to the coffee break.
Excellent. Well, thank you very much. We're going to now do our next panel, which is called The Euro in a Changing Geopolitical Landscape. And to debate about this, we're joined by Ilse Johansson, who is Secretary General at the European Commission. So let's Give a round of applause on stage. We're also joined by Heartfelt, who is a member of the executive board of the Deutsche Bundesbank, the German central bank. Please. Governor Bojci, who is the head of the Croatian National Central Bank, also joining us on stage. And last but not least, the host, the head of the Latvian Central Bank, Mr. Kazaks. Thank you so much. Thank you very much for doing this in Riga. I think everyone's very happy to be here. Very beautiful, of course, but the topic of our panel points perhaps to some of the opportunities, but also some of the challenges, I guess, for the euro area. And this is about change in geopolitics. I wonder, and perhaps we're going to start with you, Ilse, if that's okay. When you look at the euro, is this now not just a means of payment and a single currency, but is this something now bigger, perhaps, even politically?
I definitely would agree with you that it's much more bigger than just a currency. And I think we are in a very particular moment right now, not only for Latvia celebrating 10th anniversary of Latvia joining EU, but also quite a lot reflecting on the legacy of former President of the Commission, Delors, who actually was the founder of IDEA and who launched the idea. And when we learned this very sad news at the end of the last year, passing him away, I think we all looked what is his legacy and we thought, what a vision to put the foundation for closer integration and also to put in a forefront also idea of single currency and bringing it forward. I had also the pleasure of being a part of a team who was working on euro introduction in Latvia. And as Executive Vice President Dombrovskis mentioned, it was a very strong choice by Latvia, but I was the one who had to bring this news to my colleagues, other member states, ambassadors. And the first reaction when I raised the issue with them was, you know, sometimes ambassadors are getting instructions and then everyone knows that it's official position. They were looking at me, okay, you got the instructions, now you deliver them. When the decision was taken, they all came and said, we didn't trust you. We thought it's just a political choice. But it showed at that moment that making the right political choices and sticking with them also bring us forward. And the same we see right now. After Russia launched a war of aggression towards the Ukraine, it has brought Europe much closer. And I think it's some of the effects which Putin most probably underestimated. When he launched a war of aggression against Ukraine, I don't think that he contemplated that Finland and Sweden will become a member of NATO. I don't think that he contemplated that Denmark will leave their opt-out in defense cooperation. I don't think that he imagines that countries like Sweden will start a reflection, maybe we should be part of Euro. We see recently discussion also in a quite skeptical towards Euro country like Czech Republic, where President raised the issue and asked, shouldn't we consider it? So I think it is bringing also member states much closer, but it also shows that only together we are much stronger in this very changing geopolitical environment. So I fully agree with you, it is more than just a currency.
Well, thank you for that, and a lot of good points that we're going to pick up later, perhaps in more detail. And Governor Bojci, your country, Croatia, is one of the newest members to the euro. I wonder, we're talking before, and you said it had helped in different ways shield, perhaps, from shocks. I know you have a presentation that you want to show, so perhaps we can also show the slide. But I was also hoping if you can elaborate as to how the euro had perhaps protected you at times of volatility.
Yeah, we are the last member of the Eurozone. We entered a year ago, and I have only one slide, which when it's shown, I think will demonstrate well what does it mean to be within the Eurozone compared to being out of the Eurozone. And the main benefit really of being within the Eurozone is felt during the crisis. It's much more important during the crisis than in the good times. In the good times, everybody's doing fine, so you don't see that much differences. However, in the times of the crisis, you can see clearly, for example, and Valdis was talking about that this morning in his speech, that the difference, for example, in the interest rates in the countries of the European Union which were outside of the Eurozone and those in the Eurozone were large. If I compare, for example, Croatia with the peer group of countries of Hungary, Czech Republic, Poland, you can see that the interest rates during this 2020-22 crisis were pretty much half of what they were in the non-Eurozone countries. And the inflation rate, cumulative inflation rate, was higher in those countries. So this is clear that there is a benefit being shielded on a big ship on a stormy sea rather than in a small ship going your own way. Also, if I compare Croatia during the great financial crisis and during the COVID and then the Russian aggression on Ukraine crisis, you can clearly see that in 2008, 2009 we were much more hit because we were not in the Eurozone. In 2020, we were not yet in the Eurozone, but we were on a road to get there. We got a swap arrangement with the ECB at the height of the crisis in spring of 2020, and that's completely, that's on the slide, which is not here, but doesn't matter. I can tell. That has completely calmed down the market. And basically, impact on the exchange rate, on the spreads, because we were on the road to the euro, was much, much less than it was during the great financial crisis in 2008 or 2009. So again, there is a benefit, of course, of getting into the Eurozone even in the normal times. You have a reduced risk premium for a country, you have the lower transaction costs, you have access to the liquidity providing of the ECB, which is important. And in a case of, hopefully, which you never need, but in a case you need, you have an access to the ESM, which you don't have if you're out of the Eurozone. But the real benefits are clearly felt during the crisis times.
Well, thank you for that, and we will show the slide, I promise. We'll refer back to it.
That illustrates well what I said. If you didn't believe me, you'll see if the slide appears.
But it was interesting that you even said, even before joining the euro, just the idea that we would join helped provide some stability.
Because the market's priced in already that we're getting into the Eurozone. So we had the benefits already 2 years before. And this is also why we got the swap arrangement with the ECB in April, because we were already on the way into the Eurozone, and that all helped.
Well, thank you for that. Mr. Balz, obviously, Germany is the biggest economy within the euro area. Bundesbank, heavily important within the European Central Bank. But I wonder if you could, before we get into the details, perhaps explain how do you perceive the German perception around perhaps some of the geopolitical challenges, the euro as a currency, support for it, and the overall perception that Germans, it's hard to perhaps describe it fully, but the overall sense in the country.
There were so many questions now from your side, but I want to look back 10 years or a little bit more than 10 years ago, 2013, when Latvia has to decide whether to join the Eurozone or not. And there was not such a good mood, when I remember rightly at that time, to join the euro area, and politics and other important stakeholders in the country said, but for the country, it's a good thing. And I made some personal experience, because I was at that time member of the European Parliament and the rapporteur, the responsible MEP for the Euro accession of Latvia. And I traveled many times here to Latvia and spoke to all the different stakeholders. And there I have really seen that this mood was not really good when it comes to the Euro accession. I remember a meeting with the chairman of the Pensioners Association, and he put at the beginning of our talk all the books from the Eurosceptics and critics at the table. And I said, oh, what do you want to send me a message with that? At the end, it needed real leadership, political leadership, and from my point of view, it was right to do so. Because, and now I will address your questions, a currency is always a binding band. And from my perspective, it's good to have so many countries, now 20 altogether, within the Eurozone, and I'm hoping very much that some others will follow. The colleague, the governor of the Central Bank of Bulgaria, is also today here. And at the end, when it comes to geopolitics, of course, the currency is much stronger when you do have, of course, so many countries who are in the common currency zone. And so from a German perspective, we are very much in favor of having so many countries in our common currency zone. From my point of view, the euro is a clear success story. By the way, it's not only a big and important year for Latvia, with the anniversaries, 10 years in the Eurozone and 20 years in the European Union, but also the euro becomes 25. So this is definitely a success story. And at the end, as I said, 20 different countries, it brings also the people of those countries together. Fabio Panetta and Valdis Dombrovskis already figured that out in their speeches this morning. It's our common currency, and so it's at the end also a symbol for around 350 million people in Europe. So for me, this currency, our currency, plays a crucial role in promoting economic prosperity as a key pillar of our single European market, and also is strengthening the resilience, and also more and more, and even this is in these times from utmost importance, the sovereignty of Europe.
Well, thank you for that. And well, now we go to Governor Kazaks, who is the host of this conference. You're celebrating 10 years now of the euro. Your job is to set primarily monetary policy, but the title of this debate is the euro in geopolitical turbulent times. Is this now more than just a means of payment? The idea of a euro community around it?
It is. And of course, what we're very clearly seeing today, that good money, stable money, is the foundation of well-being of the society. But it's also geopolitics. So it's all interlinked, and no wonder we're talking about money, we're talking about geopolitics, and we, I hope, would be talking about that even if we would not have the current geopolitical situation that we have in this region. But they are all interlinked. And if I take a look back at the Latvian experience of the last 10 years, I think we have benefited from euro membership immensely, both economically, financially, but also very much geopolitically. And I would say that euro area, being a member of euro area, is an equivalent of being a NATO member in terms of security, if economic or military security. And if we stick to the NATO kind of comparison, then of course everybody knows the Article 5 of NATO, but there is also Article 2 and 3. Okay? And what does that say? It says that the countries should take care of the strength of their institutions and societies, and they should invest in defense. And same about euro area. It's not only, as Boris very clearly explained, euro area is a safe harbor during times of turmoil. It provides safety, but this safety must be used through structural policies to make our economy stronger. So I think we have immensely benefited economically, financially, cheaper borrowing, less volatility in financial markets. Compare crisis of 2008 in Latvia and crisis of 2019-20, the COVID-19 crisis. In 2008, we were not able to borrow even with very small government debt levels. In 2019, 2022, borrowing was not a problem. It was at very low, beneficially low rates. The problem was where to invest the money, how to spend the money in the smartest way possible. So, yeah, it is about economic issues, but also very much about geopolitics. Take a look at the 2022 second invasion of Russia into Ukraine. Our financial markets, our financial system was as stable as never. Okay, so no shocks hitting us because the euro area was providing the shield against it.
And can I ask you, because that's a very strong statement where you said it's almost the equivalent of NATO, right? And I think we've all seen what happens after the invasion of Ukraine, what happens when you're not in NATO. But beyond NATO, can you imagine, just hypothetical perhaps, what would have happened in Latvia if you had this turbulent time and you had not been part of the euro?
If we would not have been part of the euro, okay, I don't think it would have been as bad because we were already part of course, European Union, okay, and the institutions were strengthened. I don't think that we would have been one of the countries, one of the nearly 100 countries in 2020 knocking on the doors of the IMF for extra support to kind of live through the crisis. Perhaps we would have been able to sail through on our own, but by all means, our economy would have shrunk much, much faster, much, much more, and we would have had significantly higher unemployment rates. So the well-being of the population would have suffered much more. Other elements, the recent inflationary experience. Let's take a look at the neighboring countries or our member countries of EU that are not part of euro area. Much higher interest rates and inflation at least as high or about as high as we had. So more volatility, more pain for the economy. Geopolitically, perhaps some speculative attacks. But we have had nothing of that, so a clear benefit. And that's the mindset that we have in Latvia here, is that strong euro area is beneficial for Latvia, but it can be only made up of strong countries themselves. And it's in common interest. It's a win-win. So strong Europe means strong Latvia means strong Europe.
Well, thank you for that. And this is the first round of questions, but at the end also there will be time for questions for you before I forget to put to the panelists. And Secretary General, just to go back to an idea that you mentioned a number of countries at the start of your intervention, saying perhaps the experience of not just the past 2 years, but also the pandemic too, and the recovery fund and all the attached infrastructure around the euro area may inspire others to join or accelerate their process. We talked about Croatia joining as the newest member. Is that something that you expect will realistically happen, that this will accelerate discussions and we're going to see new members of the euro area in the medium term?
Maybe 3 points on this one. The first thing, all EU member states have a legal obligation to join euro, except Denmark, who has an opt-out. The question is about the choices when exactly to do so. So I think such kind of geopolitical challenges, of course, are like catalyzing factors in societies, in political circles, to ask the question what our action is, what our temp is, and what is the best for our societies. And I think colleagues already mentioned that being in a broader group of the countries, you always have more buffers. Having said that, it's also very clear that Europe per se is not a silver bullet. And we saw it also during the financial crisis, that also Eurozone as such was not so strong itself. We drew our lessons. The whole strengthening of financial system of European Union led us to much more comfortable place during the last summer when there were bank failures in US, when there was a bank failure in Switzerland. Everyone was holding breath back, but we were well prepared to weather this storm. The same goes also for the joint action. Together we are stronger. And today, even the biggest of EU member states, be it France, Germany, looking globally, is too small. The market is too small. You need the magnitude of single market. You need the magnitude of a market of 450 million people. And in the beginning of a COVID pandemic, everyone remembers the gloomy pictures which were painted. COVID is coming, so we will have a recession worse than in the 30s. Thanks to joint action with with the Next Generation EU, actually we weathered the crisis. Yes, there were a lot of difficulties, a lot of challenges, but we came out relatively well. Unemployment rates today are the lowest. We have investment, and I'm very much with what Governor of Bank of Latvia said. It's extremely important, and the most important task for us is invest that money in a smart manner so that we get out of it the most added value. Because that's the proof that just together we are strong.
And you made a very good point. It's not just the euro, but it's the EU as a whole. And you also said we have to improve it. We're going to talk about how to do that in a second. But I wonder, in terms of, now that we're talking perhaps about enlargement and new members, what about the EU as a whole? Do you predict this as a union that will get bigger? And obviously, there's a number of countries, it's not a secret, that have recently said we're here and we want to accelerate, one of them being Ukraine, of course.
Yes, I should have mentioned it already in the very beginning, that actually also this war on European soil again triggered the discussion about our security in a broader sense on this continent. And it also pushed everyone to answer the question, where do I stand? Do I want to be together with a democratic society, or do I want to be with countries like Russia? And this is a time where countries have to answer the question. There is no in-between right now, especially not being in the European continent. It's not an easy process, and I think there are a number of people in this room who also went through the enlargement process and accession process of Latvia to EU. We all know it's a difficult road, but in a broader geopolitical consideration, it's both in interest of those countries, but also of interest of Union as such.
And just to put a final point on this, what do you say to perhaps those who are critical and say a bigger union is not a better union?
I strongly believe that bigger union is a stronger union because we increase our common power. It also requires union itself to reflect how do we move ahead. What is our strengths? What are our weaknesses? And what do we need to protect our common values, to protect our democracies? And we all know that you can't take democracy for granted. It requires constant taking care of in all different aspects of its essence. So it's, for me, I'm strongly believing that it is in our interest, it is in the interest of those countries who have aspiration to join European Union, both in security, economical, and democracy terms.
Well, thank you for that, and of course you make your views very clear in terms of what you think of that. If bigger is better, maybe not, and you say it is, it will be. She made some very good points about it's not just the size, but it's the functionality of it and how to improve it from within. So question for the three of you, perhaps. Governor Kazaks, you told me Latvia joined maybe the Euro 2.0, but now we have to think about the Euro 3.0. Yeah. What does that mean? What does it imply?
We joined in 2014 when we already had a version of Euro Area 2.0, okay, which was improved, more crisis resilient, and Ilse was very clear, showing, I think, one of the very recent examples of last spring of financial markets having, shocks in the US and in Europe and Switzerland. So, is it good enough? No, we are still under construction, okay? And we need version 3.0 of Euro area. What does that mean? And these are those structural issues that we've been talking about quite a lot. And both Valdis and Fabio, in their keynote speeches, very clearly pointed to them as well. Banking union, capital markets union, common fiscal facility. I know that as a central banker, for me, that is a very clear-cut story. If we have one monetary policy, we would very much benefit also from one fiscal policy. Okay? That is way larger than the current elements of next generation EU. Okay? We need safe asset and all these kind of things. At the end of the day, economically, a no-brainer is single market. Okay? We do not have fully functional single market. Okay? It would open up growth, and growth would solve lots of problems by itself. So that's a pleasant outcome of growth, that it helps you to live better and solve economic and political problems. But of course, it needs a political alignment. We also had a discussion in the previous panel about fragmentation. In Euro area, we have 20 members. In Euro area, more than that, in European Union, more than that, and everybody has his or her own, judiciary, regulatory, and different kind of environment. So we need Euro area 3.0, and the sooner we get it, the better our societies will be. And that includes all those things I mentioned. For instance, why Capital Markets Union? We know that green transition will be costly. How to finance that? We will need private sector involvement. That is Capital Markets Union. Okay? Banking Union, same thing. We have done a lot of things in the crisis of global financial turmoil in 2008, 9, 10, and thereafter in 11. But we are way no complete yet. And I would think that it is way better to complete our framework before we have the crisis, rather than have yet another crisis and be forced to do this. So it's a no-brainer for economists, but politically, of course, very difficult.
So you put in your list, you said fiscal, banking union, capital markets union, and a stronger single market. Those are the main key points.
Yes.
So for the two gentlemen here, is that something that you would share? Would you add something to that list, Mr. Baltz?
Well, if I may, for me it's also the integration of the European financial markets is still incomplete, so I fully agree here in that respect with Governor Kazaks. Definitely lots of progress has already been made. Look at the banking union, which is also not completed, but when you look at the single supervisory mechanism or also the single resolution mechanism, but at the end, it's clear that key pillars haven't completed so far. I remember, because that was the year when Latvia joined the Eurozone, in 2014, the European Commission had a commissioner for the Capital Markets Union. It was at that time Lord Hill from the United Kingdom. And when you look, we are now 10 years later, what has happened so far? I will admit that some work has been done, but at the end, I would personally think we should speed up things here. We had already two, how was it named, action plans for the Capital Markets Union, one in 2015, the other in 2020. And action plans are good, but at the end, of course, we have to ensure that we will see some outcome or real outcome at the end of the day, because we really need a true single market for our capital. So at the end, I personally would say that we need opportunities for our enterprises with much easier access to funding. We haven't done in that respect so much over the years. When you look in the European Union, corporate financing using equity and debt securities remains, from my point of view, clearly underdeveloped by international standards. It is still very difficult for small and medium-sized enterprises, in particular, to tap into the capital market, and for startups. A lack of venture capital is definitely also leading often to financing problems. So, to sum up, action is clearly needed. Deepening the capital markets union is therefore a key building block in the further development of our economic and monetary union. And this all, especially for the background that the United Kingdom left this European Union, and with London, which has definitely been the dominant financial center of the European Union, is not anymore within the EU.
And I believe maybe, Ilse, you have a quick comment that I saw you nodding, so maybe you want to...
Just a very quick comment on capital markets, because you triggered me. I think
there was, by the way, when I have to, if I could mention this, also some self-criticism towards myself, because as an MEP also I was responsible with others from the parliament side for that dossier. So I'm in that respect also self-critical.
No, I didn't take it as a critic. It's a big challenge, because I have been privileged to follow European councils very closely since 2011. And if there is one thing which drives me crazy every time, is when heads of states and governments repeat the sacral phrase, we have to complete capital markets union. We have repeated it in European Council conclusions since then. Doesn't help. Not getting a Commission tried to have a commissioner. Also not the right answer. Action plan. In my briefing for this event, it says that we have completed all 16 actions from the action plan. Doesn't help. So we need to think something more tangible, more down to earth. And the big challenge is, I think we have few promising avenues. It was a very difficult start, but the European Innovation Council, difficult, bumpy start, but we have first projects with equity, we see return, and it's moving ahead. I had a good discussion in recent days with European Investment Fund. They are doing equity, they are doing capital markets, and the big challenge right now, what they are flagging, everyone wants the money stay only in their country. And that's not capital markets. Yeah. Capital markets equity should flow where there is a need for it. But at least I start seeing some prospect of practical things getting done.
No, I got the comfort and optimism from Ilse, so it's going to happen. Just to comment a bit.
But it needs definitely time.
Yeah, it needs time. It needs small but persistent steps every day, and then we will travel very far. Because politically, everybody understands it, but it is technically extremely complicated. And that's why it's most likely never going to be kind of the moment of fireworks when we will see, now it's done. Okay, it's going to be a continuous development, but we need to work on that. And let me advertise a bit on that as well. In 2 weeks' time, we will have a conference on that here in Latvia as well, talking about our own capital markets. Because that is a fantastic potential that we could open up, because Europe is the nation of savers.
Yes.
Okay? But we have not good enough skills to put these savings to work. And that is what we have to improve.
And it's a very good point about the savers, because some say when you look at perhaps European investment and you compare it to the US, in the US there's a tendency to put money to work much faster and earlier in life. But before we get to that, well, Governor, you've seen a huge list of things that should be done. I presume you share it.
Yeah.
The big question will be, what's it going to take to add momentum? And is all of this convulsion that's going on perhaps what was needed to focus minds?
It's usually it's a crisis, as we've learned in the past, that makes people move. Before it happens, everybody thinks it can work the way it does at the moment, and most of the low-hanging fruit in Europe has been already harvested. So this is now much more difficult things that need to be done, and you have to get basically 27 countries around the table to agree on things like changing the insolvency laws or changing the tax laws, which is very difficult. But there are maybe ways around it. You can maybe create a parallel structure for the capital markets where companies can issue, where they can finance, and then go around the fact that you have impossibility of getting 27 ministers of justice or finance to agree. And I think that we might explore these ways and let the countries have their own rules, but then agree on something that can function in parallel and enable the companies, be it the small or large ones, to have easier access on one hand to the financing, on the other hand for the savers in Europe to have a place where to deploy their money rather than keep it in the banks as Europeans usually do. And by doing that, then you actually basically creating a better foundation for the monetary union, because you're creating a risk sharing, some kind of a private sector insurance in Europe, which we are missing at the moment, because you have this home country bias in terms of the money staying within the national borders, and that creates a large exposure of what we have in the monetary union to the idiosyncratic shocks that can happen in different countries. And then we have a public sector insurance. That's where we already moved. That we do have part of it. We do have partially that through the ESM now, which was created after the crisis also, with its own financial firepower. But we also have a bit of it through the next generation now, which has been deployed as in response to the COVID, but has now turned into something different, something that should help financing of the digital and green transition in a situation where the COVID is gone and the interest rates are where they are because of the high inflation. So I mean we are moving in the public sector insurance sphere gradually. In the private sector, I think we should exploit this opportunity to circumvent the problems of getting everybody agreeing around the table. But I don't think we will have in Europe anytime some Hamiltonian moment because it's a politics. Without political union, you cannot have fiscal. That's the thing that we have to accept. But we can still strengthen the basis of the monetary union by doing these other things, which I think are doable.
And perhaps a question to all of you, and you take it as you want to take it, but now that we've said all of this needs to be done, some people would argue you can't do all of this at the same time. It's just politically not doable. So you need to set out priorities. In Davos, which happened recently, many CEOs said, Capital Markets Union, it's the easiest of all of them. Yeah, German finance minister also said, to me it's a Capital Markets Union. Some say, banking union is going to take forever. Let's focus on the Capital Markets Union. Is that something that you would share? What should be the priority so that you're able to deliver and not just talk the talk, basically?
I think it's the capital market. I agree.
That would be your number one.
Yeah, that's the easiest. to move because it requires least of the political effort on the part of the different governments. I think that the fiscal or the banking union, which to a large extent has this parafiscal component in the EDIS, is more difficult than agreeing on the capital markets union structure that can be useful for European companies.
And would you agree with the assessment? Perhaps finance ministers of the EU broadly should focus on this. That's where the energy perhaps should be in 2024 more than anything else.
Well, at the end, you have to have ongoing work on all the different parts, that's for sure. But at the end, of course, you have to define priorities. And if you ask us here at the panel, I would say, from my perspective, we should focus very much at the moment on the capital markets union. I'm very clear on that. Banking union, especially this third pillar with deposit guarantee schemes, is a very difficult topic, as you know. I made all my own experiences over the years in the European Parliament, but at the end, when we have to look what is needed first, from my perspective, we should fully concentrate on the capital markets union. And I also agree here with Governor Vucic, with Boris, at the end. This is also difficult to push forward because of all the different legal systems we do have in the countries. But when it comes to the needs for the European Union, for financial markets, it's definitely, from my perspective, the capital markets union we have to push forward.
That's where the push. Governor?
I fully agree. I fully agree. Capital markets union is the one that we have the least developed, and that's the one that we need the most. Of course, we need to work on all these issues, but capital markets union is the one that can be done painstakingly. And I fully share what Boris mentioned in terms of reducing fragmentation. If you cannot reduce fragmentation of the existing frameworks, maybe for specific instruments you can develop a new regime. Okay? So that could be one way around it, and we do need it badly. But I would still be quite hopeful in terms of single market as such. And there are a number of reasons for that. I will mention just two. Point one, that is still very much a low-hanging fruit that we have at our own disposal. Not always politically interesting or politically easy, but it would open up much freer economy. And we would benefit, our societies would benefit from that. Point two, external environment. Unfortunately, what we see is that for the global trade, it's not tailwinds, it's headwinds. Okay? We will see that different type of trade restrictions or tariffs are likely to be increased. Mm-hmm. And that will mean that globally it will be more difficult to benefit from those strategies. So let's do it among us. We have a very big market here in Europe. Let's make it more efficient, which would be able to help us during the times when global environment is not that favorable.
And I don't want to obviously create any tensions based on hypotheticals, but you mentioned tariffs, and obviously there's the US election coming up, and there's this idea of what happens if Trump wins. But beyond talking about Donald Trump and what may happen, I guess the question, just to pick up on that, should we realize that perhaps the challenges that we're seeing, they're not a one-off. They're going to become structural. The world is going to become more difficult. Perhaps the past 20 years, that's the exception. It's not the future. And do you believe governments get that? There's been a change in mentality, perhaps.
I think the picture is even slightly more challenging. We usually focus only on upcoming elections in US, and we focus on China. And very often we overlook all the emerging economies who are changing and who are also coming in this picture as a geopolitical player. And that's a huge shift. And that's exactly the reason why we can't overlook the potential of capital markets because our needs are so great that there is no way that we will manage transition with just the public money. We will need a private capital and we will need the equities. And there is potential, which is absolutely underused. So for me, that's one of the avenues where we really need to focus our efforts. In this geopolitical changing environment where you have US, China, and by the way, Chinese economy is also not doing great. Yes, they are not publishing their statistics anymore. Emerging economies, we really need to get in our thinking this concept of economic security. That we need to diversify, we need to be able to work with the partners around the globe. And trade agreements is just one instrument. And very often we focus only on this one instrument, but we really need to think in a broader picture. And this is something that we are in very, very beginning of the road only.
And because you presented your economic security plan this week, there's also been changes in terms of the no decouple, but yes, de-risking. I guess some analysts would say there has been a big change in zeitgeist in the past 2 years. Would you agree with that? That these are structural big changes the Commission in this case has taken up because there has been a change of almost mental parameters in terms of the challenges?
It's not only of mental parameters. It was a crisis which we were facing when COVID started, and we realized that we are absolutely dependent from one source of supplies. When you realize that the basic medicines the whole Europe has one supplier, and you can't get it. You realize that you are depending 80% on Russian fossil fuels. You realize that Chinese has strategically bought all the rare materials, and not only materials, but also organized processing. There is no other way than to wake up and think how we de-risk. And it doesn't mean onshoring everything back and just relying on ourselves. It means huge investment in innovation, and we see more and more new technologies coming up. It means also, and again, we need capital markets because we are good in research, we are good in innovation, and then it's all scaled up in US. So we need to get this one done. And then we need to diversify because, yes, we are a single market of 450 million, but there are emerging economies. You look at the market of India, and then we might not be so big.
And I wonder, however, in terms of, given that we have two central bank governors here, also, you've done the monetary policy, you've had to deal with inflation too. That was the other big externality in the past, 2 years basically, accelerated by the war. Do you believe your job will become more difficult, i.e. setting policy in this context is more difficult and will become more difficult? And how important will it be to get the right fiscal policy? Because it seems that on the monetary part, you've done your job, basically. Who wants to take this one?
Well, I think first, in the context of this new geopolitics, our job also becomes more difficult. It's pretty much well known that the fact that we had a super cycle of productivity growth in the emerging market economies with the process of globalization, which has helped over the long period of time to put the pressure on prices down, as the cheaper products were coming from these countries. Now you have two things. One is that this super cycle is coming not to a stall, but it's definitely slowed down compared to what we've seen over the last 30 years. And it seems it's going to stay there for the foreseeable time. And second, you get all these trade frictions, which are not entirely new. I will remind you that the things have basically started already with the Obama administration, when they refused to sign the agreement with Europe, and then came the Trump administration, trade frictions with China, then Russian invasion of Ukraine with the sanctions, and then a further set of the trade restrictions, of which there are now more in the pipeline. So it's going to get worse rather than better in the coming years. So this is not that monetary policy is no. This also affects us in a sense that this process of having help by the large productivity growth and the globalization in controlling the price increases might not be there to the extent certainly that it was in the previous decades, and that might have consequences also for where we see the future of the interest rates, R-star, as we call it, because of the price pressures. I was in Davos in a panel with Ken Rogoff, who also thinks that in the US they will see the same thing, that we have to get used to a higher interest rate than we saw before, exactly because of these geopolitical pressures and changes. And then on the fiscal policy, that's not for the governors to say what should happen, but going back to our discussion on the monetary union, one thing that we need, at least we cannot have a single fiscal policy at the moment due to the political constraints, but what we need a convergence, no? in fiscal positions, because the divergence, if it continues, is obviously unsustainable. So that's a very clear path that we have to create in the next years, and it's of course a medium to long run process that doesn't happen overnight. But we've seen during the last few years that there have been countries which managed to reduce the public debt to GDP ratios by 20 or more percentage points in a few years' time, a bit helped by the inflation, GDP deflator, but also some growth and the fiscal policy. So it is doable, and I think it's definitely doable and should be done in the medium to long run, because this will then also, the thing is also the endogenous, because that then creates a better grounds for agreeing on a common set of the fiscal policy within Europe. It's easier to agree when the dispersion of the debt is reduced rather than when it's very wide. So that then it helps further development of the fiscal components of the monetary union.
Well, thank you for that. And since we're getting to the final part of the panel, I wonder if you had thoughts on this, because there's been this idea of it will get more difficult rather than easier. And of course, your central banks and your job is the monetary policy, but maybe a better two-step dynamic with government, fiscal spending, being in a better shape, all of that can lead you to be stronger.
I can only agree with what Boris just highlighted, both issues in terms of the geopolitical environment, and I think unfortunately what we've seen over the last couple of years very clearly that we have moved in a new regime, and this regime is prone to more geopolitical conflict, and of course we don't know when, where, and how sharp those conflicts will be, but the probability of such conflicts happening will be much higher. We've seen that over the past year in the Middle East, now recently, of course, also in the Red Sea. And what does that mean to the economy? These supply shocks are negative. That means weaker growth and higher inflation. Okay? And for monetary policy, at some point, of course, it will affect where the interest rate should be. So I think we can very clearly say, unless something dramatically changes, that in this business cycle and for foreseeable future, interest rates are going to be way higher than we saw them in the previous decade. Okay? That's one thing. As for fiscal as well, yeah, I hope the new version of the Stability and Growth Pact will be much stronger in its implementation. Okay? Implementation to drive the debt levels closer to the target rather than create two groups with one with low debt, the other one with permanently very high debt. That is just waiting and asking for trouble.
So you have the deal on paper, but you say to find out whether it's good or
has-
bad, we'll have to see it in real life.
It has to be implemented. Of course, nobody asks it for tomorrow morning, but there has to be a very clear path towards implementing these regulations.
And
Maybe one additional comment. I fully agree what Martin just said. But on the recent agreement on the European fiscal rules, from my perspective, that demonstrates, firstly, the ability of the European Union member states to get here a compromise done. But I'm not, to be honest, entirely convinced by the outcome. Well, on the European level, you always have points then where you're not really convinced. Because from my point of view, as far as I have read, the rules are not necessarily simpler, they are not more transparent or more binding than before, despite the fact that we have real useful guidelines now. Why I'm saying that? The crucial point now is the actual implementation of the rules and also the effective reduction of the high debt ratios. And if this would be assured, then it's good. So formally, I would say it's very much welcomed to develop such rules, but at the end, you have also then to find the right ways to implement it. And this will still need some time.
So you're not convinced as it stands until you see how it, even if your finance minister said it was a good compromise, and he was tough.
I know that, well, we are fortunately an independent central bank in Germany, and of course it was right that they compromised on that. That's a good thing, but I just want to say from my perspective, it's good that they have found the compromise, but now the work has to be done after that compromise. So let's see what will happen by now. And as it was earlier mentioned, the member states have now really to work on this implementation.
And to be fair, for some countries to see this deeper integration, what they say is that then they want to see that everyone is making an effort for there to be a form of trust from both ways. So,
as I said, it's a compromise. It's at the core of European politics. We all know that. And so it's good that they have found one. And in that respect, I fully understood and also see it very positive what the German finance minister said. But now they have to deliver. And they, I mean, all the different member states.
And on that note, since there will be questions at the end, I want to wrap up myself, my questions. But not to be controversial, but some of the, well, not even criticism, but just checkpoints on the situation. Some would say the problem with the EU, the governments, and maybe even the Commission at times, is that it is very ambitious and wants to do many things. We talk about helping Ukraine, defense, climate, but it just doesn't have the resources to match that ambition. Is that a fair description, or would you say it's more nuanced than that?
I would definitely say that it's more nuanced than that, and I think we also need to be honest among ourselves. Yes, it's very ambitious, but I don't think that we have a choice. We have to help Ukrainians. There is no other way around, because that's a question about our values, about our democracies, about our security. Green transition, digital transition, you can't pull the stop and say, okay, we don't have means and resources, we will come back in 10 years' time. Then, for the climate change, we all see every year more and more different natural disasters. And if we just look at the summer this year in Greece, we had fire brigades there, and we sent the same week people to help Greeks to deal with the floods. So it's happening within 2 weeks, 2 different disasters which are influenced by the climate change. On digital transition, yes, we can pull a stop crown, and then let's not wonder why everyone else is in a completely different place. That's the speed how things are evolving today. So we need to get our act together, we need to get capital markets, and we need to be very smart with our investments. Yes, we have limited resources, but then we need to get out most of each and every single euro we are investing.
And how would you say the European elections perhaps may feed into this? Is that something that you factor, or is the inertia strong enough that all of this will stay there? Some say it will depend on the makeup of the chamber and who gets what.
Again, I come back to my point that we don't have a luxury of time. We started this discussion on geopolitical challenges. No one around us is going to wait until our institutional changes will go on. So we need to be extremely good at explaining what we are doing, and that's a big challenge. And we all know how much there are different populistic trends out there. We simply need to be better explaining what we are doing. We also need to listen to the concerns, but we also need to be very aware, and we did a bit of analysis now when we see those different protests by farmers and agricultural sector in different member states. There is a real concern, and they feel that we as a societies, as governments, are under-evaluating what their contribution to our economies is, and that's fair feeling. There are different reasons why there is problems for different farmers in different member states, but then also looking at the social media, looking deeper where the narratives come, at least 1/3 come from different disinformation channels, very much pushed by state actors. So there is also this element where we need very, very careful that we are conscious that in a period before the EP elections, there will be more and more such kind of trends and attempts by third countries to interfere in our democratic processes. So it's we don't have a luxury of time to wait until institutional cycle changes.
And I will go to the governor, but before, just very briefly to you back again. This commission, the von der Leyen commissioner, has been very supportive of Ukraine, and the reason why I say this is because this needs to happen now. The commissioner was very supportive, wants Ukraine to make the necessary steps to one day join the EU, that's also clear, but there's a question now of money, and this 50 billion euro for Ukraine, maybe yes, maybe no. Do you think this momentum will carry through even after the European elections? Because some say the support is manifestly less. The urgency appears to be less for some.
There are two elements in this one. The first thing, Ukraine needs this predictability in funding, and we have to have agreement on 50 billion for remaining 4 years. That goes without saying, because that allows also them to function economically, seeing predictability. We have repeated, and heads of states and governments have repeated on several occasions that we will stand with Ukraine as long as it takes. And we will need to have this discussion also among heads of states and governments. What does it exactly mean if this goes longer and longer? Because that requires also adjusting our support, our policies, and thinking about more structural solutions. And when we acted in the beginning of the war, we have seen how our policies has evolved. Initially, just sending few arms was already a big thing, and now we are discussing F-16s and so on, long distances arms. So this policy is constantly evolving. more optimistic when I listen to the discussion at European Council. I know there is also the fatigue creeping in our societies because time going on, people will say, okay, I'm tired of hearing news about the war every day. But that's the reality of the people in Ukraine. So we need to find this balance, how we keep support to Ukraine.
And Governor Kasaks, I believe you wanted to say something, but also just to pick up on this point, some would say there's an element of fatigue in Europe because wars are very expensive. And then that brings up the question, why not make Russia pay for it? Why should European taxpayers pay for all of this? And then that brings the question of the frozen assets.
Yeah,
so what happens with that?
You're driving to the same topic that I wanted to comment on when I raised my hand. But let me first kick off with what I would say a very, very clear, and I think we understand that message and everybody kind of takes it as his or her own, is that the war in Ukraine is our war. Okay? And we have done a lot, but not yet enough. Okay? There is more to do. And then as an economist, okay, let me comment on two issues. The first one, I think decoupling from Russia. Okay? We must stop helping Russia to wage the war. Okay? By still trading directly or indirectly, we are in many cases helping Russia to wage the war. Okay? And I think we should stop it. And of course there is a story or a version or a hope that when Putin will be gone, then we will be back to the old usual with Russia. And I think that is a very dangerous illusion, because even if when Putin will be gone, I do not think that Russia will suddenly change its ways. We've seen important examples in the past century, for instance. This happens when the society itself has a full reckoning of what needs to be changed. And I don't see any chance of that happening anytime soon. So I think the hopes that very soon we will be back to the old normal are an illusion, and it will never happen, and the assets that are in Russia, just forget about it. Okay? Start from the beginning. If the regime and when the regime will change, then we can rebuild the relationship. Okay? So it's stop and go story. Sorry for being harsh, but as I said, I comment that as an economist, not as a governor of a central bank. But no major difference in my views in that case. Point two. The war needs to be financed. And then the question is, do we finance it by our own means or the means of the aggressor? And in my view, this is a political decision that is already overdue. And I think that would provide the source of financing Ukrainians with arms so that they protect both themselves and ourselves as well.
But just to understand, when you say it's a political decision, you mean to provide some revenue connected to those assets, or actually say, let's do an outright confiscation?
Well,
you destroy this, we take this and we give it to you?
The current proposals that we see being discussed, of course, are about the proceeds of the Russian assets that have been immobilized in Europe. Okay? And that is for politicians to decide how they move with this.
Okay, well, that is an active debate. We're reaching the end of the session, so if anyone has any questions, this is the time to, so if you could introduce yourself and put the question to whoever you want to address it, then we'll go that way.
Maybe you can use a micro.
My question is, we have had euro in Latvia for 10 years, and it has helped us in many respects. However, in capital markets, our own stock market is by big margin in the last place in European Union per capita, which I personally attribute to the abuse of minority shareholder rights. However, what are your opinions how to bring up the stock market, or does euro really matter for the stock market?
To me, yeah. Shall I answer?
Yes.
Okay. Of course, we as a society, we as an economy would very much benefit from more developed capital markets. Yeah, of course, the numbers that we currently see, I'm even kind of ashamed to some extent to call them. Okay, it's low single-digit numbers as percent of GDP, both in capitalization and turnover. You know, there is very much potential, to be polite. Okay, and what needs to be done, it's been discussed years and years, over and over, for years and over and over. And one of the things is IPOs of minority stakes of public-owned companies to improve the liquidity, to draw in more of the private sector. Yes, that is one of the possibilities. Over the past years, lots of regulatory things have been improved, streamlined. There is also some compensatory element there to draw in market participants. Not that much success, unfortunately. Okay. Yes, Latvia is doing quite badly in international comparisons, but Estonians and Lithuanians, although doing significantly better, are not living on a different planet. Okay, so they have similar issues. And the only way is trying to kind of build it together with others, trying to link on to other markets. Difficult thing. As I mentioned in the beginning of the panel, in 2 weeks' time we'll have a conference on that, trying to see how we can push it forward. Okay? Because that is an avenue that Latvia would benefit massively if we can manage to create it. Okay. We saw last year Minister of Finance being very purposeful to drive this agenda, and I hope that he will succeed. We will do the best we can at the bank to help him.
Maybe invite him for the conference. We have time for one more question, or we go to, yes.
Thank you. My name is Elena Pinto. I'm a Latvian, a European, and progressive, and I have listened with great care to this exchange, which has, I believe, very clearly established the stabilizing impact of euro as a factor of our resilience, and in face of notably financial but also military turbulences that we're facing. I wanted to explore your views on how we can better, faster, with more impact, embrace the transformative power of euro and also of the European Central Bank, and in particular in face of other challenges and turbulences that we're facing, and notably those that Ilse, thank you, you raised, such as the need for green transformation, and also in face of the quite sharp social and regional disparities within Europe. Thank you.
Who wants to take this one? I guess to summarize, how to accelerate.
Should I?
Go for it.
The most difficult question today. It's like when you ask the central banker, how can we promote the greening and reduce the inequalities? We usually say, well, that's not exactly in our mandate, but there are things that we can do where we can help. I mean, we are not the main players in neither of these two games. It's our colleagues in the Ministries of Finance who are the ones that have means and instruments to do that, but we also work on our side, primarily in the area of the supervision with the banks. And I think that what we can do, except for our own example, so reducing our own carbon footprint, which is always good to put your action where your mouth is, is to require the disclosure of the banks in terms of the data on their carbon footprint or on the, let's say, color of their asset portfolio. And that in itself has a strong impact on the way how the banks then think about their activities, because that also involves their reputational risk. And I see that as the most efficient thing that we are at the moment doing in the supervision. Also agreeing on the kind of a European standard of reporting, on the European standard of the questionnaire for the clients, because then clients come to us and say, look, we have 4 banks and each of us sends us a completely different questionnaire and we have to spend so much time on reporting, etc. So these things are in process. They are progressing very well, and that's where I see our role as a central banks being the most important.
And she also mentioned social inequalities, right? So some would say the best way to do it is for the ECB to get inflation back to target. I mean, inflation.
For the inequalities, absolutely. That's one thing that is very well established, and that is that the inflation always hurts poorer more than the richer. So sticking to our mandate is best what we can do to reduce the inequalities. Absolutely.
And the key. And we're getting to the end of the session, so very briefly, quick from all of you. We talked about the euro and the geopolitical challenges. On that note, if we could say just very briefly, what's been the biggest benefit and what's the biggest challenge ahead? Starting with Ilse.
Maybe just one point before, if you allow, just commenting what Martin said about going back with our relations with Russia, business as usual. I think we are beyond that point. If I just take one point, we were so heavily relying on fossil fuels from Russia. It's over. And not only because of our decision. If you look what's happening in Gulf countries, in North Africa, in China, everywhere, everyone is working on hydrogen, on different types of the fuels. Everyone says, where is the future? So it's just small element, but already showing that we are going away. On your question, I think the strength of the euro is providing the market. And the main task for all of us, and particularly in this geopolitical context and in election year, is to think how we can foster the growth, how we can foster the competition so that we increase well-being of our societies, and that will bring also to the resilience of our societies, reducing opportunities for populists to get their narratives through.
And Mr. Paltz, just briefly, what do you think has been the biggest benefit of the euro, and what is the biggest challenge going forward?
Well, as I said, one single currency for 350 million people, that's really the binding band as I already described. And then the biggest challenge is to hold this currency as successful as it is, and to hold this currency on a stable curve. At the end, we have seen difficult times in the last 18 months with high inflation rates, and I think that the Eurosystem and the ECB Governing Council has made so far a good job to put this back on track.
And Mr. Burchard, you just joined. Some always say, maybe the naysayers, one day the euro will break up. You just joined, so obviously you don't believe that at all. So your view then, going forward, what's the...
If I thought it's going to break up, I would never join. So I don't believe it will. It is a project which has, as was said in the beginning,
there's no going back.
It has a political component. It's a driver of the European integration. And basically the idea was already from the Werner report from 1969. So not something politically, that's an old idea. And on the other hand, economists look at it as, issuing, Fabio has explained it, I'm not going to repeat, what does it mean to issue an international currency? It has all the benefits for everybody, for all countries that are in the Eurozone. What's the biggest challenge? That you'll find out when it happens, you know. And you've seen what have been the biggest challenges over the last 3 years. You could have not thought of it before.
And it's interesting that all the exit groups no longer talk about an exit. So I guess that speaks to that and being better is.
No, I think those who thought about it realized that it's way too expensive.
It's way too expensive. And well, now we're reaching the end of our session. Mr. Kazak's floor is yours for final remarks, and if not, well, thank you so much for hosting us and taking all of these questions.
Well, I have a couple of things to say. Coming back to Ilse's comment, of course, in terms of energy, most of the things with respect to Russia have been settled. And the reason is because that was the area where we were most vulnerable. Okay? So it was the most burning thing. What I was trying to refer to be more precise, is that the assets that we have, that Europeans and Westerners have in Russia, should not, in my view, be driving our decisions today. Okay? They are stranded, lost, call them whatever you want to, but you know, let's not. This is a sunk cost. Let's not think that, you know, we should, if we behave differently, we would regain the assets. The price is gonna be our way of living, and we don't want to challenge that. And I'm very happy to agree with Ilse that European nations have gone a very far way over these 2 years to realize that and act upon that. But we are not done yet. Coming back to your question of what is a plus and what's the worry, the key mandate, the primary mandate of the central bank is price stability. And I think we have very clearly proven that we do take care of that, and we have acted appropriately, and monetary policy is working, and we have seen inflation coming down very sharply. And now the next task is not allowing it to come back. So we are confident about our monetary policy. We see good results, but we have to be patient before rushing or moving to cut the rates. Okay, let's be patient. Okay, because if we make a mistake, that's going to be painful to the economies, and to those least well off, it's going to be most painful. So let's take care of them. Point 2, I think keeping on to the momentum that we have in many areas that will make us more resilient and stronger as a union, as a currency union, as a European Union. Let's not lose the momentum. Let's see that short-term difficulties will bring long-term benefits. And let's look at the long-term benefits. And let's not be that sensitive to short-term difficulties.
Well, and on that note, well, thank you very much to the 4 of you for taking all of these questions from the audience and myself. It was a pleasure. So thank you very much, and see you next year.
Thank you.
Thank you.
Arvils Ašarādens, Minister of Finance of Latvia. Ginteris Skaiste, the Minister of Finance of Lithuania. And Sanita Bajāra, CEO of the Finance Latvia Association. Dear friends and colleagues, we have a proverbial challenge ahead of us. It's a challenge that every panel and every conference faces, being right after the lunch, right? So we have to keep people awake. It is going to be tough, but I think we'll manage, because the panelists have all agreed on 3 rules. Be funny, no PowerPoint, and let's call out. I give everyone on the panel the authority to call out anyone in the audience who is seen falling asleep, right? So don't be surprised if at some point someone from the stage says, "Gentleman in the 3rd row, dark suit, open your eyes," immediately, right? So not particularly the third row, but any row can be targeted in this way. So be aware of that. Right, so there are three individuals on the stage whose job titles are kind of self-explanatory why they are here, the two finance ministers and the governor. Sanita Bayar is perhaps someone who needs to be introduced a little bit more, particularly to those of you who are non-locals. Sanita is now the CEO of Finance Latvia Association, but 10 years ago, at the time of Euro adoption, she was the Secretary of State at the Finance Ministry, and she is one of those individuals most intimately involved with all of the details and nuances of switching to Euro. And remember, that process took place in the aftermath of that very painful financial crisis we had in Latvia. So it was no easy task. By the way, one of my favorite episodes from this morning was when Governor Panetta was unpacking that paternality issue of digital euro, right? What was the assessment in the end? He was the grandfather of, right? So many fathers, and he was the grandfather. So if we kind of keep up with that paternality kind of analogy, then Sanita is aunt, godmother, yes. I don't know about the mother, but godmother, aunt, most certainly, of Euro adoption in Latvia. Sanita, please remind us, start us off with reminding us a little bit, as this is a 10-year conference of Latvia's joining Euro. Remind us of the main challenges and how do they look with the benefit of the hindsight now, 10 years after the event. Sanita, please.
Yeah. Thank you so much for so kind introduction. And of course, today we have heard about digital euro paternality, but also it was mentioned about founding fathers of euro. And honestly, I really feel like some at least implementing mother of euro in Latvia, because I joined Ministry of Finance in 2005 as a first euro project manager. Then I came through the crisis 2008-11 as a contact person to work with International Monetary Fund, to work with European Commission, and there are in the room people who I work together on these challenges. And of course, Euro introduction was our exit strategy. And then after all these tasks, I became State Secretary, and we all together implemented Euro in 2014. The first target date was 2008. We failed to reach this first date, but of course all preparations started in 2005, as I mentioned. Therefore, for me, it's almost this Euro story for this time, starting from 2005. And I would say that the lessons learned from my side, that it's a very wide project, it's very involving project, and it's necessary to think about careful planning, to think about transparent communication, and very much about collaboration, because so many public service institutions were involved, and so many different working groups were involved in preparation. It was not only about practical preparations, but a lot about cooperation between different institutions, and of course communication, because you need to tell how is it work and what people, real people from street, everyone should do in this Euro changeover process.
Right. When you look back at that, I mean, could you identify, for the benefit of perhaps countries that are going to be on a similar path? So with hindsight, I mean, what could have been, differently? What was the most successful and perhaps not so successful episodes in that preparation, huge task of preparing for it?
I couldn't name really one concrete mistake, because we were very careful and we worked a lot with our colleagues who implemented euro before that, and we learned a lot from them. And they informed us about all tricks, and therefore we try to be prepared for everything. I remember this night from 31st January to 1st of 31st December, 1st of January, we even used satellite phones, because in few countries it was difficulties with mobile operators, because as you know, in this just the midnight moment, many people are sending some SMS, and therefore those operators, they really have some problems, practical problems, and therefore we even took into account such kind of possible problems we could face.
All right. I'm sure we will come back at some point to many of those practicalities and experiences. I want to move on to the finance ministers and to our Lithuanian colleague first. What I've invited the participants of the panel to think about is perhaps, I mean, in order to make this perhaps a little more funny, a little more fun, and perhaps provocative, I have invited the two ministers to think in terms of a counterfactual. What if the two countries 10 or 9 years ago would have stuck to the national currencies? Obviously, the world has changed tremendously. The war in Ukraine, pandemic, inflation, what have you. A lot of things have happened. How would the two countries have faced that with national currencies? If we think in terms of lessons learned from this counterfactual perspective, what would you say Lithuania's experience would have been?
I think we can compare the periods that we did have during these 9 years. In the beginning, 5 years from 2015 until 2019 were quite stable. But even then, after when we had the anniversary of 5 years in Lithuania, the Bank of Lithuania measured the effect on the economy. And then they said that the effect was positive. And the calculations was that the borrowing cost decreased for our country by 1.2% for public borrowing. And for businesses and households also, borrowing costs decreased by 0.35%. That means that everybody saved a bit of money. Also, the effect on the exports also was felt. At least 1% increase in exports was due to euro. So it was during the stable period. Even then you can feel the consequences which were good. But I think that the main effect, what you can feel, the goodness of euro is during the crisis period, as you mentioned, and we had several of them. I'm Minister of Finance for 3 years, so I think that my term was constant crisis. You know, you were managing one budget after another, to presenting all the measures to households, businesses, and every day you have to find something new and to save somebody. So it was crazy 3 years. So I would say that without euro, we would see definitely very different picture, because we can compare to the maybe similar, not similar maybe, but just crisis period that we had during financial crisis. And the effect for the countries like Lithuania and Latvia also was really harsh. And I would say that borrowing costs during that period without euro was so frightening that you had to take measures that was not just not popular. It was crazy bad decisions, not bad decisions, but the decisions that were very difficult to take inside the country, because markets thought that your national currency could be devaluated, and the markets just reacted like that borrowing cost increased. And the financing gap in your budget just also was widening, and because you have to spend more to save your economy, to spend more, to stimulate the economy, but at the same time, the revenues of the budget are decreasing, and you have to take the decisions that are just tough. And we have seen that these decisions, that borrowing costs made the politicians to make the decisions that really was unpopular, and I think that the price of these decisions were quite high at the same time as well, the popularity of the politicians as well, because we can understand that these decisions really are not very easy. So I would say that in this case, the accommodative policy, monetary policy of European Central Bank helped a lot, and all the countries like Lithuania, like Latvia, like all the other countries in Eurozone could help their economies. And we see that, for example, during pandemic year, Lithuania's economy didn't drop at all. We had 0% growth, but it was not like a financial crisis period when our economy dropped by 15% of GDP. That was crazy year. And for example, last year, with all the energy crisis, Lithuanian economy had a soft landing. The decrease in economy was 0.4%. It was quite soft scenario, I would say. So I think that the euro really helps, especially in a time of crisis, but also during the normal period as well. So I would say that it's a win-win-win decision.
And then it's, obviously, with this counterfactual, it's difficult to calculate. There's so many variables, particularly if you add the geopolitical aspects of that with the war in Ukraine. And the repercussions that the Baltic economies or financial systems or currencies might have experienced as a result of that. I'm sure we will return to that aspect as well. By the way, I'll do a couple of rounds with the speakers, but then I hope we might have a Q&A with the audience. What do you think about? I mean, let's do it this way. If there will be no questions from the audience, the wine reception is going to be canceled, right? So you better think of some questions. Is that a credible threat? No? All right. Mr. Ashradins, the same question to you with the counterfactual. Let's play around with it. Is there something to add from your experience and from your perspective on these 10 years, if we can do a kind of imagined comparison, what might have been in a different scenario?
Okay, thank you for the question, and I would like to begin with a little bit historical retrospective, and I just put something from myself regarding introduction of euro in Latvia. That was, I would say, last but very important goal for my generation who started really independence process here. And our general idea was to integrate as maximum, become independent and integrate as maximum possible in Euro-Atlantic system. And there was accession European Union, accession to NATO, all other most important institutions. And then Euro became as a final, very, very important part of the goal to achieve, to be part of Eurozone. That was very important, very symbolic, very important, and to understand this generation was ready to sacrifice anything, including life. Yeah, and some people did. Yeah, and this was very important that this happened. That is why very important, huge importance for myself. Regarding Latvia and this issue, I would like to mention three things. Number one, I'm sure we wouldn't survive during this period against those who were interested to devaluate local currency. And the pressure was enormous all the time, back and forth, and you see, we passed different crises, and as this I would mention was one, and there were many forces, external, internal, political, and remember this, we had added to all other what I mentioned, we had a very tough IML crisis in the country, yeah? And during this period there were a lot of forces who said, oh, well, it's very interesting to gamble, yeah, to just evaluate the small currency and to make some profits on that. Second, I think what is a very important gain, that is fiscal policy. very prudent fiscal policy, what we have during, what we really achieved during Euro period, fiscal discipline law and things like that, I'm sure we wouldn't be on such a low debt level as we are today on 40% what we have now. And third, but at least it is. I don't know how we should manage through those complex crises what we have so far, COVID, war, energy crisis, inflation, and just see how the other countries struggling, which have own currency. Look on Hungary, yeah? High interest rates, debt. Maybe after year 2030 we can discuss the accession of Eurozone. Yeah? I don't know how we should, I don't want to speculate, but I could say as a small little economy that could be very, very difficult to survive. And even, I mean, countries with very organized economy, I would say Denmark is doing fine, but look today with Sweden. Swedish krona is fighting in order how to survive after let's say, the inflation period. Yeah? I would say for small, as I said, with a little ship in a stormy ocean, it's much better to be on a bigger, much bigger ship and survive during those storms as on let's say on collective system, yeah, instead of just alone fight to somehow survive in this ocean. As I would say, those three factors would change our picture a lot.
Before I involve Mr. Radev there, I will come back to Minister Skaista here. Minister Rashadan has mentioned 3 points, but I'll kind of throw back at you 2 of those. Devaluation would have been hard to resist, and fiscal discipline would be much harder to maintain. I mean, political kind of pressures. Would you agree on those points? Would you think Lithuania's kind of experience might have, from your point of view, would you add to your reflections the same points, or?
I would say that we learned a lot during the financial crisis, and maybe fiscal prudence that we have now, how we act when we form the budgets, and temptations you always have when you go to the parliament and spend everything to have the budget deficit crazy level. Nobody cares about that. But now you understand the consequences, and I think during the financial crisis we learned that you should act wisely if you want to have the normal periods without tough decisions. But also, yes, Eurozone also helps because you have some strict rules, you have easier answers to the politicians who wants to spend every penny and borrow everything and to spend it every day, because you can say that that's European rules and you have to be strict. It's like all European rules, but at the same time, I think it's all connected to the same topic. So I think that Europe, not only Euro, but Europe itself helps us maybe to explain easier to the national politicians who maybe are not so strict as you wish sometimes.
All right. Governor Radev. Oh, yes, please.
Elaborate, and that's very important, a little bit discuss it. It's, how to say, fiscal security mechanisms are very important what we introduce, fiscal discipline, fiscal policy or fiscal discipline mechanisms. You understand, so, what we have a new, actually quite fragile democracies here. There's a lot of new parties appear on political landscape and so on and so on. And what we have right now, I would say as a tradition, it is new form of government accepted too. It's turn it left and a different approach to politics, but all accept the rules and say, okay, we keep our debt low and we keep our balances inside the Maastricht criteria. And that was a rule for last, I don't know, I would say more than 10 years, was whatever you want to do in politics, but keep fiscal framework as it defined. Yeah? And that says that's allowed to maneuvering inside this framework, not experiment with the financial system, not experiment with the state, but allow for different policies to let's say to be public. But again, there is rule. Yeah, there is rule. There is limits. Yeah, and we overcame, for example, populism in this somehow. Yeah, we passed at least this bridge. Let's see what will happen in future. But at least this fiscal stabilization mechanism is very, very important for such a fragile democracies as we have.
Right. I think very valuable points. We might actually come back to those, especially in view of the approaching elections for the European Parliament as well. Right. So, Governor, finally, I'm getting to you. So, obviously, there have been a few delays with Bulgarian accession. Now, next year, I hope we meet in Sofia for the New Year's party, Euro party. Is that more or less?
I hope so, yeah.
We hope so. Right. What's on your to-do list? Most hard, difficult items on your to-do list for this year?
Before answering this question, allow me to speculate a bit on your first question. If you look at the data, you'll figure out that our starting positions, I mean the Baltic countries and Bulgaria, in the Euro adoption process was quite similar. Now, in terms of GDP per capita, in comparison to the EU average, the Baltic countries have 10 to 15% higher GDP per capita than Bulgaria. So this is one indicative measure of what is the impact of the membership. Now, on your question, the shortest answer is we need to bring inflation within the price stability criterion. We meet all other criteria, some of them by a significant margin. For example, our debt to GDP ratio at slightly over 20% is the second lowest in the European Union. But let me elaborate a little more. Actually, and this may surprise you, but actually from the central bank perspective, the most difficult part of this exercise is already behind us. In fact, the most difficult part was when when Bulgaria joined the ERM2 back in 2020, because of two reasons. The first reason was that this membership involved a lot of major difficult reforms. For example, with regard to the banking sector, we introduced very ambitious reforms in the area of banking supervision. We established the resolution function from scratch. We organized unprecedented 2 rounds of asset quality reviews. So it involved a lot of reforms. That's why I think that from the central bank perspective, it was the more difficult part of the process. The second reason is that in retrospection, the decision to join the ERM2, in fact, is political and to some extent discretionary on the side of the ERM2 countries and the ECB. Moreover, and this is differently from the experience of Latvia and the Baltic countries, in parallel with the ERM2, we also joined the banking union. Therefore, since 2020, we've been a full-fledged member of its key mechanisms, the single supervisory mechanism and the single resolution mechanism. Actually, Bulgaria is the only country outside the Eurozone that is member of the banking union. And the central bank of Bulgaria is the only central bank outside the Eurozone that is working in close cooperation with the ECB. So against this background, in fact, we focus on 3 sets of tasks for this year. As you rightly mentioned, the indicative date for the accession is January 1st, 25. So the first set of tasks include the implementation of the so-called post-ERM2 commitments. Important part of this is to finalize the legal convergence process. This is the first set of tasks. The second is to advance the practical preparation for the euro changeover. And the third one is to, of course, to meet the convergence criteria with focus on inflation. The implementation of the first two tasks is very much on track. In fact, the most important legal act to meet the requirement for the legal convergence is the new law on the central bank. This law passed already through first reading in Parliament, and we expect that the Parliament will adopt the law finally next week. So also we're advancing the whole set of logistic and technical preparations with regard to the IT, payment systems. We're in the final stage before starting the process of Bulgarian euro coin production. As I mentioned, we meet all convergence criteria except at this stage inflation, and that's why this is our main focus. So despite the fact that there is clear downward trend in inflation, still the average inflation is above the criteria for price stability. I think the most important question is here, what are we doing in order to address the inflation problem? And the central bank, we started 18 months ago with a number of measures using the monetary policy and macroprudential policy tools at our disposal with the clear purpose to accelerate the transmission of the ECB policy. A couple of examples just to give you a flavor of what we are doing. We raise the minimum reserve requirements rate for the banks to 12%. By comparison, this requirement in the Eurozone is 1%. We also was one of the first central banks that reactivated the counter-cyclical capital buffer, sequentially increased it to 2%, which is one of the highest in the EU. What remains to be done, at least what we expect as central bank, is a more aggressive attitude from the government with regard to the fiscal policies. There are some positive signs in this direction. For example, the last year budget was implemented better than expected, with a budget deficit of slightly above 2% instead of 3% as originally planned. To conclude, we are making good progress, but it remains to address the inflation problem.
Yeah. It's going to be a busy year. It's going to be a busy year.
It is, yeah.
A follow-up on that. For someone, like myself, perhaps, who hasn't followed this extremely closely, but I think most of our audience may fit in that category. How would you summarize? For a while, you were on the same page as Croatia on the process of joining. How would you characterize or kind of illustrate the reasons why kind of the path separated a little bit? Were those different pace of reforms or different size of countries, economic or political aspects? What would be the kind of most concise explanation for us to understand that divergence a little bit?
In the end, it's a political process. It was discussed this morning. It's an issue of political leadership. I think in our case, this was the main issue. Those who follow on the process probably know that until 2020, we play a leading role in this last cycle of Eurozone enlargement that culminated in the bank union membership and joining the ERM2 together with Croatia. But in the very same year, 2020, when we joined the bank union, the ERM2, the political crisis erupted, and it blocked the process for 2 years. So one of the lessons or conclusions of our own experience, but it's confirmed also by the experience of the other countries, is that it's a political process. It's an issue of political leadership.
So political continuity or discontinuity and those aspects. Yeah, right. Well, thank you very much. By the way, before I come back to our Baltic speakers, so obviously the Baltics are small open economies. Are any of those lessons that were discussed here kind of resonate as being relevant to Bulgaria as well? I mean, Bulgaria obviously is, there's a question of economic convergence, catching up to the EU average level of GDP per capita, for example. Is that something that you see that process as being significantly speeded up after the accession? Will that help that process? Any other relevant issues that you might find from the Baltic experience? How relevant is it to you, actually? Governor, it was directed to you. I'm sorry.
No, definitely. That's why I started with this example. If not with the 3 Baltic countries, with 2 of them with very similar indicators. If you take a look at the stage when we start the Euro adoption process, and you can clearly see the difference. That's why I refer to this indicator, the GDP per capita in comparison to the EU average. So the difference now is between 10 and 50% with the 3 countries, and we started almost from the same position.
Yeah.
Of course, probably there are a number of other factors, but I think the key role is the Eurozone membership.
Right. All right. I'm going to do another circle of comments from the audience, and then the wine reception is at stake, right? So I'll open up the floor. Now, what would you say, and I'm asking this to the ministers, what's on your to-do task list in terms of making the euro even more of a success story? I mean, you mentioned it's a win-win-win already, but how to make it into an even kind of faster vehicle for catching up with the EU average, increase the GDP, stimulate the economy, stimulate investment, all of these things that that you mentioned already. The membership in the currency union already gives a boost too, but how to kind of switch on the turbo mode to improve the economies. Minister Asha, yep.
Just
the plan.
I just had been thinking on your previous question. I would say for all those good things what already was mentioned in this hall about euro and, for example, Bulgaria accession, I would like to put another issue here. It's a very important part of deterrence policy. Those who are, just if we speak about European Union and the single, those who represent a single currency or Eurozone, that is a, much stronger country to resist to external geopolitical risk.
Yeah.
Let's say it's not only we're talking about resource what is accumulated inside one country or group of countries. That is whole Eurozone economical force could resist. Yeah, that's a little bit remark to your points why it's very important. But there is a lot to do, and there of course is if we speak about futures, that is crucial issue is that will be tough for Baltics and Poland. I think, maybe Finland is its whole Eurozone, that is debt issue, and that could be improved and make Eurozone even competitive. And it's very important if we look, and that is how to cooperate in order to well-functioning single market. We are very, very fragmented in all cases. So this morning was addressed as how to operate more modern digital companies in Eurozone. In European environment is very, very complicated. All of them giving up and then at the end leaving Europe and exiting somewhere in the United States. But this is very important. And capital market, what is very important, at least for Latvia and for Baltics as such, united capital market, banking union was already mentioned. But finally, I think digital euro is very, very interesting process. That is, on my view, that will be complete disruptive issue on the banking world in European Union and so far, it's not clarity on technology and everything, but I think it's completely could change the banking system in European environment, and of course make for companies and citizens more accessible finances and more system addressed to their needs, the company needs, those are more, let's say, what we have on list, but I think from most interesting process, I think that we will see and look into this at the digital euro.
All right, that's the Eurozone level. But what about the local level? Economic transformations within countries, I don't know, reforms that could boost your own country's competitiveness and benefit we get out from the common currency.
Yeah, I would say that there are two dimensions, as you mentioned. One of them is European level decisions, and capital markets union. I think it's one of the most important decisions for our region, especially because we're lacking capital. Also, banking union is very important for us. Our banking sector is very concentrated, so the additional possibilities to borrow from external sources would be beneficial for our economies. But if we talk about the local decisions, what can we do? I think we can compare the countries that are inside the European Union, inside Eurozone, and how they manage with the same currency. Is it working the same good for one and the other country? And I would say that it's not the case, because for some countries the growth is performing faster than for the others. And for example, looking at Lithuania's economy at the beginning, when we joined the European Union, we had 50% GDP per capita of European average. At the beginning, when we joined Eurozone, we had 75, if I remember correctly. And now we have 89, almost 90. So it's, you can see that it helps to amplify the effect if you're working well. Because for other countries that were above European average at that time, now you see that their numbers are looking similar to Lithuania's. So at the same time, the countries that have euro are performing in quite at just different speed. So from my perspective, the sound public finance is really important, and also keeping the external competitiveness. Not just to make populistic decisions, spending and giving everybody everything, but sometimes you have to make tough reforms, and it helps you to be competitive and also to attract capital to the country, and also to see growth. So I would say that sound public finances is really important. Not to be populist and to spend as much as you can, but not
all right,
not everything.
Sanita, you were at the finance ministry, so you have that experience, but now you're looking at it from the private sector as well, from a different angle. What would you say would be for the Latvian government or any other Eurozone country's government, tasks, homework to accomplish to make most out of your godchild, so that he grows up even stronger?
Okay, I think that in today's geopolitical situation, economic development, it's a question of national security. Because we really need our economy to grow, and therefore we need investments, and therefore Euro, I guess it's a strong foundation for those investors to come and invest here, because we always will be the border strait towards Russia, but all these securities we have from Eurozone, we have from EU, we have from NATO, our defense capacity, local defense capacity, all these things, they should play the pivotal role for those investors to decide to invest here in our economy and to bring us this development, what was mentioned before here, and which really can solve many problems as such, because we really need strong economy development.
Right. All right. Shall I open? I have a number of questions. I mean, I have a long list here, but you wouldn't want to leave it all to me. So I had, yes, a hand up there. So let us gather a number of questions, and then anyone in the audience can address those. Yeah, let's deliver a microphone over there. Matis, please.
I'm from the Latvian Institute of International Affairs now. I used to be member of parliament. Mr. Ashiraden said he mentioned that the Swedish crown is in trouble. It's true. But my question is, and I should also mention, is there a connection between that and the fact that Sweden now feels itself vulnerable? Before it was aloof. Nothing what happens in Europe can affect us. We'll stay neutral. Now they're in NATO. Is there a connection between that and what is happening to the crown now, krona? My question then is, will Sweden join the Euro Union before Denmark does?
You mean the Eurozone?
The Eurozone.
Yes.
Before Denmark does.
I'm looking for the Swedish minister here, so but we might have an opinion on that. Anyone else, please? Yeah. Yes.
I got the microphone at least, so thanks. Yeah, my name is Morten Hansen from Stockholm School of Economics in Riga, and my question is to the governor from Bulgaria, but it's based on what both of the finance ministers raised, and that was the big no-no word back in 2008, 2009, namely devaluation. But since 2014 in Latvia, potential currency devaluation is a term that has left the language. It's just not there anymore. And I was just wondering, for you in Bulgaria, I have been looking a little bit about your currency regime, this currency board. It seems to be quite successful, but has it also been a concern for you this year that there will always be a potential devaluation when you're not inside the Eurozone, but if you come into the Eurozone, then it just goes away forever? So just to know a little bit more about it. Thank you.
All right, thank you very much. Anyone else, please? An opportunity. We've earned our wine reception already, so feel free. It's all good now. Please.
Gerd Seglits, an economist. My question is about the Eurozone. If you look at Latvia and Lithuania, the borrowing cost, not the borrowing cost, but the loan interests in Eurozone are the highest in Latvia, Lithuania, among the corporates, among the households. If you compare a loan taken by a Latvian company and a loan taken, say, by Austrian or a German company, and this has been happening for many, many years. And of course, it's detrimental to our competitiveness, our business competitiveness on the European markets. So what can we do more to drive down these interest rates, both on the housing sector, for instance, our housing stock is bad, collapsing, we need more cheap loans, we don't get. The same with corporates. How do we drive down? Thank you.
All right. A number of questions, thank you very much. Which one do we take first on behalf of the Swedes? I mean, this is an interesting regional issue, don't you think? I mean, there might be some similarities. I mean, there might be a place for this question in the previous panel with the geopolitics, but it is interesting, right? You have, as a result of geopolitical kind of earthquakes, you have NATO enlargement, but you also have the kind of countries thinking about additional security, economic security, financial security out of what might come out of Europe. And some of our very important regional players are not in the Eurozone. I mean, Poland is not, and Sweden is not. So whatever we have to comment on that regional aspect of the Eurozone. Anyone wants to take that one? No?
Oh, well,
come on.
We can't find a Swedish governor or Swedish Minister of Finance here, but I could say this is a very important regional aspect, and I might say what I'm here from Latvian businesses here, it's first time in a history actually here's that. With problems with kronor, we are not interested anymore to export to Sweden. Yeah, and this is a little bit something, but start ringing the bells. And what should we do about it? And of course, Scandinavia and internal European market become more and more important for us. It's just very practical, but I could say this that is interesting implication. But regarding Sweden, there are very strong referendums with no decisions, and this is not us to let's say to
so Atis, this was as far as I could pressure them into stepping into the Swedes' shoes. There was the question addressed to the governor.
It's easy one, so the answer is no. Our currency board arrangements are rock solid. Of course, when we joined the ERM2 and after that, we have discussed this issue a lot with the European Central Bank, what will be the impact of the process on our exchange rate, and there is broad agreement, even it is included in a legal act, that we will join the Eurozone with the current exchange rate. It's 1.95583. So if you look at the data, we publish the balance of our currency board every week. You'll figure out that in terms of coverage and all other indicators, we're well above the minimum. For example, the coverage ratio is very between 150 to 170%. So there is no risk of devaluation or any troubles with the exchange rate.
By the way, as long as the governor has the floor, I was wondering, a couple of speakers earlier today mentioned the monetary union is like a collective defense clause. It is the economic Article 5, and all of these things that are particularly important for exposed countries of the Baltic states. Is that geopolitical aspect as important, at least is felt as important, in Bulgaria's case?
Could you repeat it? I couldn't get the question.
So a number of times during this conference, it was mentioned that the Eurozone has a geopolitical component to it, added security dimension.
It's clear. Of course there is. If you follow the debate in Bulgaria, it's more than obvious.
Right.
So the good news for Bulgaria is that these parties that are against the Eurozone and in a broader sense against the European Union, they're a slight minority.
Right.
So, but this was an issue that was discussed the last couple of years. So no doubt there is geopolitical aspect on this issue, and when the issue of Eurozone enlargement is considered, the geopolitical aspect is very important to be discussed and assessed.
Right. Right, so there was the third question about the interest rates and loan rates for businesses and individuals in Latvia and Lithuania, I suppose the question is. So can we briefly comment on that? Is that something that's being discussed? It's being discussed quite a lot in Latvia these days. Is the same thing in Lithuania?
Yes, of course, because the situation is quite similar. But as our Prime Minister says to the difficult question, there is only one easy answer, the wrong one, because there are no silver bullet to make some easy decision and everything will be solved. We have said that our banking sector is very concentrated, so the competition level is quite low. The new actors are not coming to our countries because we are very small markets, and to entry into the very small market is relatively expensive, so the banks are not making that decision. So what we're doing, at least in Lithuania, we're going and explaining to the commercial banks that it's very profitable market, you should come, you should invest here. And all the banks that are interested more or less into making that decision, they want to invest in all three Baltic countries at the same time. So if we enter, at least not for the business, not only for the business lending, but also for the households as well, they want to have the branches in all three Baltic states. So we are working together, but it's not an easy way to go through. Also at the European level, I think the decisions about the capital market union and banking union is crucial for our economies, but it's really the very tough discussions. And I remember myself in the beginning of my term, I think that we were making the same questions, the same discussions, and they mentioned that we achieved, it's so small that it's really doesn't give me very much optimism about the fast solutions in this case. Also, I think that what might help, at least in our country, we see that households and businesses, they take loans in fluctuating interest rates, and also during the very high interest rates, that became a problem. So at least now we are trying to present a law to the parliament that the banks would be obligated to offer you or the fixed one or the fluctuating one, but you have to take your own decision if you want to be if you want to know very stable interest rates, or you like to take the risk. Also, for the businesses, I think very important is the institutions like Altum and Invega in Lithuania, and I think that we are putting there additional funds and giving the possibility to the businesses to have loans in a competitive conditions, but it raises also the capital level inside the country. But there is no easy answer.
All right. Yes. We have another question, and we have time for just one question, so it fits very well. If we could deliver a microphone over here, that'd be great. Just don't throw it. It is going to be a big bang if you do. All right.
Yes, good afternoon. I'm Gabriele Giudice from the Commission. I used to work on the three Baltic countries over a decade ago, and during the crisis and in preparation to the Euro accession, so it's very heartening to hear today how positive the balance is after a decade. Now this session is about who is next. I mean, we're taking that Bulgaria will be the first in line, but then the question is who is next afterwards. And there the question, I think, is how can the Euro be more attractive than what has been until now. We have Croatia already in, and so it is attractive. But if we want to go beyond, it's important also to consider one aspect, which is entering the Euro is related to the banking union. It comes together. And so the question is that there are other countries like Sweden, we mentioned, and Denmark, who are also very careful about this decision also on these grounds. So the whole day we've been discussing how important banking union and capital market unions are for the future. But so far we haven't heard very specific questions. So I would like to ask the ministers in particular, because before we had the governors, let's say the central banks, what would be from the point of view of the Baltics experience, the steps, 2 concrete steps on which you think would be crucial, let's say, to make progress in the short term? Thank you.
So I think the 2 ministers would like recap the question. So concrete steps from the Baltic perspective on the path towards the banking union.
Concrete steps of the Baltic states to...
From the Baltic perspective, what steps should be taken? Is that correct? All right. That's a toughie.
I didn't catch the question.
The governor has the answer.
Okay.
The 2 steps which you as Minister of Finance, having the experience and the perspective that Baltic countries would like to see happening in their banking union in the short term.
Right. It didn't make it any easier. Does the governor want to?
Yeah. No, it was discussed this morning. It's still work in progress. It's clear, the banking union. So, in my view, the first 2 steps that needs to be undertaken is to push for finalizing what was started and is not finished. The 3rd element of the banking union, and I'll add also what was discussed this morning, the capital markets union. So I think the country should push, our country should push to finish the work, because it's still work in progress. And we keep repeating this, I don't know for how many years, but the 3rd critical pillar of the banking union is not there. As I mentioned, and we have this experience and we participate in this discussion, we try to push in this direction to the extent possible. But what we have now is 2 operational mechanisms, and they operate, in my view, very, very well. So the single supervisory mechanism and the single resolution mechanism, but we miss the rest. And in addition, this was also discussed this morning. So we have the monetary union. We don't have the fiscal union. So I'm not so sure that the minister will push very much in this direction. But if you want to move forward, this question could not be avoided anymore.
All right. So that's okay. If we want to be a bit careful with formulating answers there, we have plenty of time afterwards also to discuss this. I want to close with a question to all of you. How has Baltic public administration, Baltic business community, Baltic societies, in your view, changed as a result of the euro? If you summarize, give me a couple of points there. Things that are oftentimes mentioned about this. I mean, increased transparency, predictability, more outward economic activity, bunch of other things perhaps. What would you say are the most important things? Society, business community, public administration. I mean, things have changed over the last 9 or 10 years. I mean, I feel it as an individual, as a person, right? I mean, euro feels completely kind of natural. I mean, it would be difficult to imagine life without it, right? All the transactions, you know, wherever you're doing that. And we've forgotten about many things that were extremely relevant in the period before, right? And also, you mentioned both of you mentioned the predictability of governments, increased predictability of governments in terms of fiscal prudence and those things. So anything to add here in terms of how different social groups, business groups have changed the mentality, the approach, their character?
Yeah, if I can start actually, because I believe that we have got some approvals that those concerns society had about euro introduction, and first of all it was about losing some kind of our national independence, because it was not only money, it was some kind of symbol for many of people, even businesses. And now after introducing euro, we have strong feelings that we didn't really lose at all. And therefore we now actually more evaluate this greater cooperation and deeper actually cooperation with European Union, because it brings us more security and more business and development possibilities. Therefore, I guess it's the most important thing that we proved that those concerns do not have some kind of place.
Yeah, the appreciation that the currency is an economic instrument, right?
Exactly, it's a money,
yeah,
as we always said.
Rather than a symbol.
It's not about some kind of our beliefs, like in God, again, but it's about economical reasoning and some practicalities. It's a money.
Right, but that is a change of mentality, right, and approach
Yes.
to things.
Yeah, it's very philosophical question, and the answer is also philosophical. I think that everybody feels more European now, because if you're going abroad, you cannot, when you go through Poland, you cannot see a kantor or something that you have to exchange your currency from litas to zlotys. Now you go through Poland and you go to Germany and spend euros, and I really like that. And when I'm on a holiday myself, I like the countries where is Euro. I feel European, I feel at home. I do not have to count the consequences of my lunch, and that's really nice. I think that for the business it's also the same, but on a bigger scale. You just can't predict. It's easier to communicate. It's more comparable, the prices. It's everything more convenient for everybody. So I think that sense of being part of the bigger community of Europe, of Eurozone, it's really the actual philosophical outcome of that practical decision.
I don't mind the philosophical points. I'm actually looking forward to those. Minister, please.
Well, I would like to mention two things. One is, as a lot of good things were said about that, and I would sum them up as a Baltic and Latvian society. The people after introduction Euro feel more confident. Operating with one of the world's largest currencies. Businesses feel, we making transactions in euro, people traveling with euros and say, we can pay in euros or whatever. And that's a few societies which are confident about future and existence. And second thing is, if we're putting in context how that changed our societies, and we have on the break here was media who asking questions. And one of them asking, Mr. Russian, does everything was so sweet about euro? And it was said here. I said, yes. Oh no, one thing is, how to say, at least European and Baltic society for quite a long time enjoyed so little interest rates on in Eurozone. And now when the times has changed, the transaction is actually very hard to when it is, and those interest rates was a little bit below real ones. That was in order to stimulate economy. And the next period will be very tough actually to live with real interest rates, and that will teach actually economies to how to really operate on much tougher conditions. And that's I could add to this. There was, and I can't say that it was bad, but that is right now times has changed, and when interest rates are high, companies or people complaining, a lot of debate, political debate, that's good or bad, but we used to live with that. That's how it is. Thank you.
Governor, I mean, do you see Bulgarians' mentality changing in the expectation of that transition?
No, it had very positive impact on the the institutions, and I'm referring not only to the membership, but I'm referring to a whole process. As I mentioned, we made very important institutional changes, not only in the banking sector. As a result of the process, when we started the process, so there are very positive institutional changes. But I think another important aspect is it should be considered as a two-way street. What do we do to improve the institutions of the euro area? I can see one common thing between the Baltic countries and Bulgaria, and this is the very sound fiscal policies. I think 4 countries have a long-term track record of disciplined budget stance. So I think more voices of common sense with regard to fiscal policies is something very, very important, and it's missing to some extent in the recent discussions. So I think not only to consider the impact which the process and the membership on our countries, but also what we contribute to the whole thing, how to improve the institutions of the euro area in the European Union, because there are many issues that need to be addressed. So I think our countries, although very small, could play an important role.
All right, Governor, we're looking forward to that party in Sofia next New Year's Eve.
Soon.
Right? Okay. Right. That's a promise. Thank you very much. We're out of time. Many thanks to all of you. Many thanks for the questions. Oh, thanks for that. We tried to be fun, right? It's hard to expect that from finance ministers oftentimes. It's against their kind of job description to be fun, but they were, right? So thank you very much. And as we approach the end of the conference, I'd like to invite the Executive Vice President Dombrovskis back to the stage. Yes, please. And we remain here. Yes, please. We remain here for a couple of minutes, please.
So, good afternoon, ladies and gentlemen. First of all, I would like to thank everyone for your useful input and views today. Today's conference has brought us back many memories from 10 years ago and more, particularly with discussion about the path to the euro, which was taken by ourselves, by our friends in Estonia and Lithuania. So today we looked back in time. We recalled lessons that we have learned, not only from the global financial and economical crisis, but also from the hard work we had to do to introduce euro, and our experiences in Eurozone in past years. Well, one good conclusion I think we can draw from this, that the benefits we were discussing about when we were just planning to introduce euro have actually came true. I think that was very clear from all speakers. We also looked forward. What comes next? Who comes next? How can our single currency innovate and keep up with the times in a digital format? I think we all appreciate the benefits that the euro has brought, not only to each euro area member state, but also euro area collectively. Strengths, and not just economic strengths, solidarity and stability, global influence and standing. We are 20 countries now, but soon there will be more. The Euro project was primarily conceived as an economic project. But today it represents so much more, as many speakers today have stressed, a safety net in difficult times, a sense of European belonging. And I very much agree with this view, also in the context of recent and dramatic geopolitical shifts. Over the years, the Euro project developed a crucial political edge. And looking at the euro is still a young currency, so we have many years ahead of us. It was a coinage act of 1792 that established the United States dollar as a currency. The euro was only launched in 1999, and now it's the world's #2 currency. So I think we can be proud of what the euro has achieved in this relatively short lifetime and build on that for the future. Again, I would like to thank all of you for coming to this conference today. Thank you.
Thank you, Executive Vice President. Let me also conclude with a few words of thanks. As you know, the conference was co-organized by the European Commission and the Bank of Latvia. Therefore, I would like to express my thanks to the Governor of the Latvian Bank, Mārtiņš Kazaks, and his team, and also to the Executive Vice President and his team, because indeed, to make it successful and fruitful, without your input, it wouldn't be possible. I would also like to thank the Commission representation in Riga team for making it indeed happen. And of course, big thanks to all the speakers, panelists, moderators. I think it leaves us with a lot of good ideas and also a lot of work still to do for the years to come. And with this, I would like to conclude the conference, but before we go, and we enjoyed Riga on Friday night, I think it's time also to take a family photo here in the front, and indeed, that would be a good memory for the future. Thank you very much.